All right, guys, what's going on? It is your brother African Emporium. Right, power and profit to you all. And here's what's interesting. How about I've been speaking for the last 5 minutes and didn't even know that my mic was off. Right? Like I'm really about to go jump in the river right now. Power and profit, everyone. Uncle Jocelyn, grand afternoon to you all you beautiful people stopping by, hanging out with your brother today. I'm excited to be back in the building. Right? We had a wonderful little powwow yesterday. Our typical, meet and greet reality sometime that we do on the Sundays. But the great thing about it, we had a chance to bring out some great content, right? Speak about some awesome promotions, right? Some things that's going to get, get our monetary, intellectual faculties, spazzing a little bit, so to speak, right? So I'm super excited for that. And what all that's going to entail and bring for somebody that can, obviously may have the opportunity to win this challenge, right? This trading challenge, right? As they, have put it, the world's largest trading competition. And, to date, I haven't seen anyone else out there put forth such a challenge where actually they're going to fund you the opportunity to go through the challenge, right? Most challenges I've been in myself personally have been with, us putting up our own money, trading our own different accounts, and then we're just trying to see who can come out, in the end as the victor. Well, with this scenario, right, they're going to fund you with a $250,000 demo account, and the person who has the highest profit value at the end of the 10 days gets the opportunity to win a $250,000 trading account. The great thing about it is that it's not just a one winner take all reality. They're going to be 10 other prizes that's going to be given out too, or 9 other prizes given out too. So from first place all the way down to the 10th, there's still going to be opportunities where a person can still walk away with a traded or funded account, right? So from the intro accounts to the student accounts, and from the expert accounts, and then that one lucky winner going to walk away with that pro account, which is a $250,000 buying power trading account. So get excited for the opportunities, right? So that's my theme for the rest of these little days until we get everybody signed up and locked and loaded for this great opportunity. Is get excited, because again, you have nothing to lose, right? You're not paying anything out of your pocket. Only thing that's available that you have to submit to is the time to get after this opportunity, right? And how to work that around your daily trading, regimen that you do with your regular trading account. Or if you do work a 9 to 5, how can you benefit from it, right? So again, some of the rules are already outlined. You guys we went over that yesterday a little bit, but again, if you need more details on it, the link is in the description box. Everything you need to know as far as the challenge in itself. Just click on my link, go through the information. You'll kind of get brought up to speed on what all this thing is going to entail, right? So again, with that being said, all I'm saying is if you ain't sharing that link with other people around you, shame on you. Shame on you. All right, because again, we talk about just the pure opportunity. So even if they trade or don't trade, again, have them sign up, because they can, people, strike gold every single day, right? They may not necessarily even been looking for gold, as a prospect or whatever, but yet they still strike gold or come up, with a win, so to speak. And so the aspect of trading, especially if you are familiar with it yourself, you can help others as well throughout this challenge, right? There's no rules barring you from helping someone else in your household with the challenge. Meaning, if you're trading it too, then they trading, and y'all may be trading side by side, mirroring each other's trades or whatever. You can help them, always have the opportunity to win too, because who knows? Again, they may as well just also, be fortunate and walk away with a prize. A funded account, be it 14,000, 80,000, 160,000, or a $250,000 trading account, right? And so again, like we did yesterday, we kind of played the little promo video with Mayor speaking, about the challenge in itself, kind of getting everybody hyped up for the opportunity. And I'd say for them to do this, again, they don't have to do this. There's nothing that that they really need to do this for. They're pretty solid in terms of the amount of clients they already have underneath them, anyway. So, it's just a scenario where, hey, they're trying to do something good to kind of bring, give something back to the community. And so for someone to give away pretty much, let me put it in layman terms, they're pretty much going to give away, let's say 9,000 for the actual pro account, because that's what a pro account costs, like 9,000. So basically roughly near 10 grand. Experts account costs roughly like was it like 6,000, right? A student account costs you 3,000, and an intro account costs you 500. All right. So, and they're gonna give out multiple student accounts, multiple intro accounts, and I think they'll give away maybe like 2 or 3 expert accounts. So you add all that up together, that's roughly about what, 40,000, somewhere around there. They pretty much are going to give that away. And so again, I don't see TD Ameritrade doing it. I don't see E-Trade doing it. I haven't seen Light Trader do it, Lightspeed or Sure Trade or any of these other interactive broker, any of these other accounts doing that, or trading platforms doing that. And it's no swipe against them. It's just that again, we come in for for opportunity, right? And we know it's a competitive market out there with these different brokers anyway. So if a person willing to fund you some money, right, or fund your account to trade with, under their dollar, their watt, then hey, again, what do you have to lose, right? In that perspective. So again, I deal in things that has relevancy and doesn't, have any kind of fine print. This has no fine print, right? It's just simple as, hey, sign up, get the opportunity to win. You win, you walk away with the bag, right? And the ability to make a bigger bag if you have a trading account now, because now you can trade through it, right? So again, power and profit to everyone. Uncle Jocelyn, thank you for stopping by, hanging out with your brother, African Emporium, on this beautiful afternoon, on this money day. Y'all know I like to call Mondays money day, because it's the first day of the week to get out to the bag to set your week off right. We know this crazy news that happened over the weekend with Trump tweeting about China has brought this market to its kind of realization that, hey, you was getting a little too frothy, too big for your own britches, as the old folks would say in the South, getting a little too big for your britches, young man. And so we had a crazy sell-off last night in the futures market, where the Dow dropped over 500 points. Since then, the market has recovered almost half of that, a little bit over half of that, at this trading hour of the day at 141. We have the Dow up, definitely a little bit over into the 200 range, as opposed to being down near 400 or 500, which it was earlier. And so you're gonna have some people buying the dip supposedly at this point. That's basically what's happening. Now, that doesn't necessarily mean that we're all, we're in the all clear, because we also do know that this whole trade deal is contingent to Trump really getting the upper hand in this trade deal, even though he has more to lose than actually China does. And so he's getting a little impatient because they haven't really, got the right negotiable terms on the table properly, to the tune where he's going to be excited about it, right? And a lot of it, we know at the end of the day, the linchpin is pretty much the intellectual property value of the deal, right? America's fighting tooth and nail to try to make sure that they keep China from stealing the so-called intellectual property of American, companies, this, that, and the third. And so that's what really sparked this whole trade deal in the first place anyway. And, again, that's just a part of reality where they've been doing that back and forth to each other for decades. We know how this stuff goes. America steals China intellectual property. China turns around and steals American intellectual property. So again, they would never tell you that, because again, whoever country, that's the presiding country always have their value of propaganda. But that's just the facts. Again, it's no, hey, whether you like one or the other, but that's just the reality of things. So that's why they're fighting, and they're trying to establish this new trade deal in a way where, again, from an American perspective, they're trying to leverage some of this opportunity they have by having this robust market and having, plugs throughout the country, and also, the world in itself. And so adding that 250 billion, 25 billion extra value in tariffs is a big amount of money, right? And so under the data, they're saying that America is losing up to about $600 billion every year through trade leakage, so to speak. I mean, that's money that's kind of fleeting the economy, because the trade, deals and the trade imbalance itself is lopsided for other countries as opposed to America. And so again, whether you, dislike Trump or like Trump, whatever, if you just deal with the data, and if it can benefit you in some kind of way, stand on that value, right? Because we are entrepreneurs, we are endeavor-seeking people, and we just, we deal in data. So that's just the reality, right? So Ian, moving on from that. So let's get back to talk about this wonderful challenge. Again, I'm sure you guys still a little pumped up from yesterday. If you tuned in, and if you haven't signed up again as of yet, shame on you, right? Go ahead and click that button to get signed up, get ready for this opportunity. You got a lot of time on your hand, a little bit up until the May 16th, which is the deadline to get signed up. As you can see right here, I have on my screen here, I'm sharing with you guys. You have to apply by May 16th, right? By 12 p.m. Eastern time. And so again, that way you locked and loaded and have your slot, ready to roll when when it kicks off around May 28th to start the competition. All right, so get excited. So real quick, let's run a little promo video real quick. Let's make it all cheesy. Y'all know how we do it. Let's take it to full circle. Let's let Mayor, do his spiel about the trading competition. Right, I'm sure he's like super excited. He actually hit me up the other day, on my little Facebook and stuff. And again, y'all, we follow him on Instagram, whatever the case. But again, he's excited about it, and he know a lot of us who are progressive partners of the company itself are trying to also bring some relevancy to it as well, because again, it's just a great opportunity. You got, again, like I said, nothing to lose, right? Whether you like your own preferred broker, you dislike them or dislike, doesn't matter. It's still a free opportunity that you get to win, a potential $240,000 buying power trading account, right? And then you can win it, and then you can go trade, these little stocks again, like Amazon, whatever, and just make all kind of money, right? Buku kind of money, right? All right, so get excited. So let's play the video right here. All right, let's get the day pumping a little bit here. I know I'm pretty amped up today. Pretty much can hear my voice, right?
Hi, this is Afurakan from Tradenet. I would like to invite you to join the world's greatest day trading competition. Thousands of traders from all around the world will be trading at $240,000 live demo accounts. If you win the competition, you will be funded with a real live $240,000 account. That's almost $250,000. Can you make it? Do you have what it takes to become a trader? Sign up now to prove it. And here's how the competition works. Each competitor gets a $240,000 demo account to trade with. You have 2 weeks or 10 trading days to trade the demo account. Whoever has the highest account balance by the end of the competition is the winner. The winner gets, as I mentioned before, a $240,000 funded account to trade with, together with Tradenet's Pro package valued at $9,000. In fact, all 10 winners get funded accounts ranging from $14,000 to $240,000, with a total of more than $1 million to trade with. Can you make it to the top 10? Click here and sign up and prove to the world that you own it.
All right, guys. So that is the promo video for the competition. That is our brother Mayor Brock giving you guys the insight, or the skinny, as we like to say, right in the hood, or what's going down, right? So get excited for that, right? So again, cost you nothing. Right? I gotta keep reiterating that, because you know how people are. People always asking, man, what's the fine print, man? What's the fine print after report? I asked people inbox me today, man, what's the fine print, man? I'm gonna have to pay some, man. They're gonna ask for my credit card and something that, man, they're gonna ask for my social security. No, man, don't ask for none of that, bro. Don't ask for none of that. And so, matter of fact, I sit here and walk you through the sign up process so you can see for yourself. And so I got some other brothers hooked up this early AM too. And again, some of my female trader peers as well, got them set up as well, so they're super excited. And it's weird too, because some of my the female traders I know, they were more excited than the dudes a lot of time. They're like, man, where that link at? Let's get this thing popping. And so they're like super excited. So I'm happy again just for them having the opportunity again to try to trade the challenge. So again, you hook up with your little partners in your own Discord rooms or whatever social media you trade through or circles you have. Again, y'all can share trades together in real time. You can mirror each other's trades in real time. And again, who knows? Somebody out of that group may end up walking away with the big prize, right? Or at least one of the prizes that they're going to offer, through this competition. All right. So that's just that, And again, I hope you guys are just really looking forward to just the opportunity that you may win. All right. So enough of that. So you guys, if you have any questions, again, everything I have listed is going to be down in the description box. So you can go, definitely click the links, go through it, see if see all the different details of terms of service and what they're going to require of you. It's pretty much self-explanatory. Only thing they're going to ask of you is pretty much basic stuff to make sure that you verify who you say you are, obviously full name, email address, phone number, and then again, proof ID. So that way they make sure you're of legal age, because again, that's per the SEC. You can't, have no one out there underage, trading under, account, whatever the case, and they're not of legal age, right? Without parent consent, so to speak, right? So that's about it. Nothing more than that, right? And outside of that, you will have a manager contact you once they have all your information, so they can pretty much give you a nice little back, back brief about what's going on, what to expect for the challenge, and then from there, you have enough time where you can kind of just, check out a lot of the Tradenet videos or whatever you do to get familiar with the platform up until the challenge, right? So, and when they actually, accept you for the challenge, they're going to actually go ahead and give you the account, right? You have to download their platform, download what they say, right, the demo account, and you won't be able to trade it up until the competition, right? So don't get too excited, because someone will ask me, like, yeah, I could train on it up until the challenge. They're not going to let you train on it up until the challenge. So it's going to be set at 0. The amount is going to be set to 0 up until the day of the challenge. So in between time, if you don't already have the account, you have to go to YouTube or just mirror me, so pretty much, because I always trade with Tradenet when I go live anyway. So you can kind of see how I have my setup. Whether you want to do it that way or you don't, but you can obviously really customize their process or their platform to your liking. That's what I think I like about Tradenet. You can move screens around. I mean, you can really toggle it the way you want to make it comfortable for you, as opposed to having kind of like a brick and mortar based type of platform where it only has one layout, right? And not that much kind of adjustability to it. So, again, that's why I also enjoy Tradenet platform too, right? So, but that's it. So that's basic, the basic stuff they're going to require of you. After that, it's game on. After that, it's pretty much game on, right? And guys, you already know what the prizes are. We went over that yesterday. So again, second and third place gets an expert account. Fourth and fifth get, a $3,000 student account worth, $80,000 buying power. And then 6th to 10th place pretty much get, an intro account worth $14,000 buying power. All right. But I'm hoping you guys are gunning for that #1 spot, right? Get that big purse, right? Walk away with that $250,000, then, go out there, your first trade, you make about $8,000, $9,000, $10,000, right? And then you just take you a nice little trip to the island somewhere. Right, which I would love to be actually at this point, but I gotta get busy, right? Getting ready to pack up my home here shortly, so I can make my next transition back toward the DC region, right? So, but that's that. So hopefully I get a chance to really be comfortable in trading it too, because I'm definitely gonna sign up. I may not have the time like you guys are, because I'll be in the thick of my moving, but I am still gonna sign up just on GP, because I would have no other way. Because in some of those moments that you guys may be trading it, I am going to try to go live and trade it with you guys in real time. Like, whether you take my trades or you don't, but I am going to try to see if I can some days go live on YouTube and be trading in real time, so you can see what I'm doing, right? And because again, I might have one of them, one of those home run trades I get every now and then, and I knock it out the park, right? And I definitely want to share it with you guys, right? So that's that, all right? So power and profit to everyone. Again, thank you guys for stopping by, hanging out with your brother Afurakan Emporium on this wonderful Monday. Hope your guys, day is going, pretty well. Hope you are getting to the bag, making the, what they call the biscuits, the cheddar, all that kind of stuff, and just, being, motivated properly. So again, the link is in the description box. The link is in the description box. Do not hesitate. We are actually in early above everybody else, because I got contacted by them Thursday, Friday. I was on the phone with them all pretty much, for a good part of the afternoon. And then also Saturday, I was on the phone with the management. So they are really, really stoked and excited. Obviously, the circles that I'm in and people that, hang out with me, because again, I am a progressive partner with the company. So they really want to make sure that anybody that follows me instantly gets an opportunity to get right in the door without any kind of complication, right? So again, whether you new to trading, never have traded before, you have no idea about trading, don't let that hinder you, right? Because the whole thing I've been speaking about since you guys have known me is what, hey, let's just get you excited about the opportunity, right? To learn how to invest, to learn how to trade, right? And here's the opportunity where whether you know enough or you don't, but you still can come in, so to speak, and kind of play with the opportunity. And who knows, you may just be fortunate and get lucky. And so within that, what I'll try to do up until the competition itself, I'll be doing a series of videos where I come on and kind of show you, pretty much a lot of stuff about the platform itself, what to look for, some basic little, tips of what you might want to plan for going forward up until the competition, right? And so again, we're just trying to bring opportunity to the family, right? And that's what matters above all things. Can you bring something to the table, right? Can you bring something that can benefit someone? And that's what's exciting about this competition. So share this, share the video, even share the video, right? Because people can always go back and watch it themselves, right? Again, you have family members, friends, co-workers, whatever. Share it with them, right? So they can easily go down there, click that link to get signed up, and then get after this opportunity, right? And it's just simple as that. So again, I see some of the family that came in. I see we have Over Gordon in the house. As always, power and profit to you. Good to see you as always, Over. All right, we have my family Matt Tip in the house. Good to see you, family. Money time all day, every day. Good to see you. Salute to you, family. All right, I see my family Mika One in the house. Good to see you. Peace, power, and profit to you, Evil. As always, right? I see the family coming over from the other channels. I love it, right? Because this is what I like to see. Us engaging different, values of content that could be a benefit to us, right? As opposed to talking about a lot of things, we're actually going to see if we can provide some kind of value to the family, and that's what this this competition is all about. I'm already sure that Gordon gonna sign up. He probably already signed up. That's probably the no-brainer for him. I'm definitely hoping my sister Eva Monica had already signed up so she can get after this. She definitely went to some of the training, and again, this is a great opportunity to kind of get out there a little bit and test the waters a little bit. Again, it's a demo account. So, worst case scenario, if you lose the challenge, you have a chance to kind of go through the experience, right? And that's the greatest thing about it, just having the ability to partake in the challenge itself. Yeah, because again, if you do mess around and win, all I'm saying is you get that $250,000 account, and your first 2 or 3 trades, you make a couple little, 3-figure, maybe a 5-figure type little, trading profit win, just give your brother a cut, just throw me a little something under the carpet, right? Slip me a little something in the envelope, right? Just kidding, but definitely, again, I'm just super humble, that we have this opportunity to present to you guys. So again, get excited for that. So yeah, Over Gordon said he already signed up last week. He ain't even playing the radio. That brother already locked and loaded. He already locked and loaded, right? So again, I just look forward to seeing somebody again, like I said earlier, that I know, turn around and win this thing, right? That's what's gonna really get me just super amped up. I'm like, yep, see, all right, the family been getting at it, man. The family been getting after this stuff, right? So that's what's super awesome. So all right, guys. So, but I just want to come on and kind of bring some, again, some more color, some more, insight into the opportunity, the competition, the whole nine. Again, giving us the opportunity to prepare. We have enough time allotted, at this point, to get to the competition. We're not necessarily, like a lot of people have to rush, for the opportunity to kind of get in, because we're in early pretty much. It just kicked off, Thursday. Right, Friday, I was kind of busy, so I didn't get a chance to really, go out there and promote anything of it. Saturday, same way, I was busy because we got a lot of stuff going on for us on my side of the world, whatever. Preparing, my home, to kind of go in the market here for a renter, and so I've been having to, deal with people coming through, whatever. And so, yeah, if I had time on Friday, I would have been all over Friday, sharing it. But either way, we still good to go. So we kicked it off yesterday, Sunday. Did a nice little video again. You can go back and watch it if you have to, and kind of get all the details of the situation. Then you'll be good to go, right? And again, like I said yesterday, my goal, or I would say my job in this aspect, is to make sure that your process is seamless, right? You don't have to deal with any kind of issues in that regard. So if you sign up and they may not have got back with you yet, or whatever the case like that, that's what I'm here for. Right, I'm here to lobby for that perspective, to make sure that you're good to go. All right, so I can make sure I contact the managers and be like, hey, that's somebody that I know personally. This is their name, this is their email. Hey, what's the hold up for us? You're getting them in a slot for the challenge, right? And so that's what I'm here for, to be the pretty much a liaison for you guys, right? So get excited for that, right? All right, so that's that, guys. Again, just excited about this day overall. I hope you guys again start off your day right, in the proper way, right? Obviously, get into the bag, as we always like to say, power and profit for a reason, because that's what we're searching for every single day: power and profit, right? Making some proper moves. That is obviously inherent to what we should be doing anyway, right? So get excited, right? Yeah. Hey, what's going on, family? My family T-Bone came in the house. He said, got the algo ready. Yeah, you got the algo ready. Hey, anything to make it happen, family. That's what I'm talking about. Again, use that intellectual, wisdom that we have. Make it, again, just get after this opportunity, right? Again, it costs you nothing. Right? Oh, I can just open up my little camera here. I'm looking all kind of fresh off, like I'm getting ready to go hit the water, which I am. Hold up. Oh, dang, I ain't hit the mesh run button. Okay, there we go. Yeah, so I got my brown shirt. I'm getting ready to go put on these little BDUs, right? The ACUs actually. And in a minute, I got pretty much all my stuff set for the day. My tasks and things that I had to do for us, they're pretty much already taken care of. That's why I was a little late starting the live stream, because I was supposed to have it up and running by at least 11, but I had to make sure I get all that stuff taken care of, so I can get away and get me a little afternoon time, and because I really only have about 2 more weeks, actually, well, about a week to be honest, of free time, somewhat free time. It ain't really free time, because after that, I'm gonna be so knee deep in boxes and getting stuff. Look at, yeah, it's gonna be a lot of sleepless nights, right? And up until the movers come and pretty much move everything out here. As you can see, even some my bookshelves. I mean, I got some stuff down already. I still got some stuff still up in there. I got to take out. I still got a lot of books to take out of there. Another little knickknack. So I've been dragging my feet a little bit. I need to hurry and get on the ball, right? But again, this is a good opportunity where at least now I do have some time to sit still enough to kind of provide this the information for us, the challenge itself, or just daily information like I always do when I go live, right, through my live trades or whatever the case. So again, in this moment, I just find it to be very beneficial to me to share whatever I can with the family, right? And that's what I try to do every single time when I come on live, right? Provide something, right? Some data, some content, some knowledge, or something, whatever the case, that makes it easier for us to again come together and share and build awesome information. All right. So again, the greatest thing about this, again, like I said before, it costs you nothing. Got everything to gain, nothing to lose. All right. So get excited for that. Right. All right. So power and profit to you guys. Right. So if you guys have any questions real quick in the back chat, fire away. We'll do like a little Q&A real quick if necessary. If not, like always, I'm gonna share my screen with the trades I have going on for today. Again, I had a couple little swing trades. Did pretty well with them out the gate, and the most, again, we still watching the market here at this point anyway. Like I said earlier, it's kind of rebounded a little bit, obviously off the lows of today. Again, you're gonna have those dip buyers that come in. Obviously, there's a buying opportunity, and that's the best thing about the market too. Again, this money can be made both ways, up and down. So it's not like you're kind of stuck in a position where if you miss the ride, miss the boat some way or some scenario like that, or miss the bus, that you can't, make no money for the day. Now, by all means, you never chase the market, but there's 2 ways to make money in this market, up and down. So you're not just limited to one spectrum, And so again, if you just only trade up for now and you're still learning, that's fine. Sit still and just learn the market by watching how it moves and operates under all this news, right? Yeah. Sometimes the best trade made is the one that's not taken, right? And we live by that creed sometimes, because again, knowledge is also in the value of observation, right? How thoroughly you can observe things, take you some notes, and realize later if it's a benefit to you, then guess what? You can go back and implement that same skill or pattern or trend or whatever a lot later. All right, so power profit to that. All right. So again, with that being said, again, I'm going to share my screen. Again, you guys have any questions for your brother, definitely post them in the back chat. Again, share this with people that you know that may want to partake in the opportunity for the challenge. All the information, again, like I said before, is in the description box. The link is up there near the very top, right? So that way you don't have to have any confusion. Just kind of go ahead and find it right away, and then you kind of get yourself going and locked in. I also have started, adding my social media, points of contacts in the Discord, in the description box itself too. So in the event that you want to connect with me outside of, obviously YouTube, or some of you guys probably see me on Facebook every now and then, but Instagram, I just got my Instagram page up, so I'm trying to build that up. And definitely, the WeTrade HQ Discord room, which obviously I'm a mentor of the WeTrade HQ family over there, right? If you haven't signed up for that free, the free website that we actually have for WeTrade HQ, definitely get locked into that too, because it's a beautiful website and it's free, right? And it's a good way to kind of track stocks, track crypto, get a chance to kind of go through a lot of the stuff that we do every day as a trader, or even investor, doesn't matter. But again, you have a place where you can kind of go in and and enjoy a nice little service, or them providing pretty much a nice little service just for free, right? Cost you nothing. So let me post that link for you guys here in the back chat, just in case, again, you guys do decide to want to go check that out. It's well worth it. Again, cost you nothing. So again, I do have my mentoring services that I also have through there as well. Again, right now I'm kind of in that down period, but I am still going to try to provide some content a little bit here and there up until I have my complete freedom from all this moving, and then we can get back to grinding. Right? We're gonna get back to grinding like we were at a point before all this stuff became like, okay, get ready to move again. So thank you, Uncle Samuel, right? Uncle Samuel Jackson, right? But that's it. So there's the link for the WeTrade HQ in the description, in the back chat, if you do want to sign up for that and just get locked in. Again, cost you nothing, just a free service, right? Again, crypto. Again, we have learning tools over there as well. We have the mentors. We have where you can track your trades, chat with other traders, different brokerages on there as well. Again, it's just a plethora of good opportunity, right? That you can come in and then be able to benefit from, all the the knowledge that's dispensed through that wonderful platform in itself. Again, can't say enough about Jacob, right, and Brad. Those guys are super awesome. Being able to provide this, they had a dream and they built their dream, right? And we all kind of met up under Ricky Gutierrez. Some of you guys may already know him too. Young kid that's been on fire a little bit too in his own little, growth and evolution as a trader. Went out and built his own little platform, and some of us kind of did our own thing, and that's what Brad did. He went out and did his own thing, trading OTC stocks, and built his own platform up. And today, now he has his own successful, company up and running. Him and Jake. Right. So again, the brainchild of, for them two guys coming together, here you go. Today you got WeTrade HQ, right? So I do a quick little screen share. You guys can see the platform if you haven't already. But again, it's a nice platform. And again, I'm excited to be a part of the family over there too. Right. And whatever I can provide to help, that's what I'm here for. Right. I am very humbled to be able to do that. So that's it, guys. Great platform. Right, so you got leaderboards, all that kind of stuff as well. Some of the guys, that's been getting in, making a lot of money, as you can see here. You got some guys got some nice little profits here, right? And so just like we having the trader challenge through Tradenet, some of the guys are challenging each other in the Discord rooms, right? So you got a couple of guys in here making some good money, verified profit. This is verified money too. So you got somebody already close to $1 million, or two people actually close to $1 million, Chase and my homeboy ICAP stock, right? And then you got a couple of people, one guy over about 150,000 so far. And then you got Young Money. I know Young Money. He's actually one of the mentors that we have as well. He's up and popping already, right? He just actually got the program, the platform not too long ago. He's already up near $30,000 right now, right? He just really, I would say maybe about a couple months ago, if that, somewhere around there, a couple months and a half before you actually start, getting this mentoring stuff going. And so through his trading, again, he's already up near $30,000 on the year, right? Another one, Joy P, is up 22,000, right? B Smith himself, already bagged in 12,000, right? And a lot of this stuff probably ain't even completely updated, but this is where they was at that point. So I'm pretty sure some of these numbers are probably a lot higher than what they are by all intents and purposes, right? And again, I'm behind because I didn't get a chance to even update none of my stuff because of, again, what happened to me over the past month and a half when we got orders that we'll be moving back to the DC area. That kind of, somewhat, slowed me down a little bit with my little value and growth. But I am going to get all my stuff, up and popping here shortly, so I could be a part, of this leaderboard too, because I like this kind of stuff, right? And it's a good reflection of how we do what we do, and it's to show you that it's people out here making, they get to the money, right? And it's no matter, even my family down here are Cardenas Hubbard, he got $20 in profit. This guy might have just started trading. He's already figuring out that he can be successful in the market, and no matter how much money or how much, how less of amount that you may, see it as, that's positive, because that's showing that, hey, I can do this, right? And so at some point, I'm pretty sure when I look, come back and check this guy, maybe 3 to 6 months, a year from now, he's gonna be up here in this, probably up in this $10,000-$20,000 range, possibly, right? But it all depends on how well he wants this opportunity. Obviously, as an investor trader, it's all up to you. right? And that's what makes this a great opportunity, because there's no middleman. It's just you against the market. And to me, that is like so awesome, because we know about a lot of the stuff out there where people are overly educated and underqualified in terms of what management really wants, because they don't want to pay you what your worth is, or even the inverse. It doesn't matter. But either way, why fight with that in this day and age when there's other opportunities out there that you can partake in? And that's what I love about the market, because again, it's just you against the market. Again, don't care if you have felonies, baby mothers, bankrupts, and all that stuff doesn't matter. They can't screen you and discriminate. None of this stuff matters. They can't, overlook your resume. It doesn't work that way, right? As long as you got a soldier, you can trade the U.S. stock market as a citizen. And they can't stop you. So get excited, right? So again, that's what I love about this opportunity as an investor trader, right? And that's why I go hard about it, and why more of us need to be locked into the opportunity, right? Because it's come on, we got to get right. Right, we got to get at this stuff, right? So again, that's the website. Again, we got forums where we talk about certain stocks, or discussions. As you can see, you got posts, you got the views where people are kind of discussing certain stocks themselves. Again, that's also awesome too, because now you get a chance to kind of network with other traders who have a same liking to you as in a certain stock or whatever. You guys compare notes or whatever, right? So that's awesome, right? So again, that's just some of the stuff on here. So we also got the crypto stuff on here as well. And so again, for some of you crypto traders out there seeing the market kind of wait back up again, guess what? Boom, right? We also got a crypto screen on here too, right? So it has some nice little kind of real-time data what's happening in the crypto market. So you got everything you need all in one little platform. And it's free. It don't cost you nothing to sign up, right? Just come in, sign up, and here you go. You ready to rock, right? And you'll be trading with other people like I know. And obviously, every now and then I'm on here, right? In some of like the little forums on certain stocks, right? Typically, it's always Tesla or some of the big ones that I typically trade a lot. I'll leave some commentary in there. You can go back and view it later, whatever. But y'all pretty much know the kind of stocks I trade anyway, because I'm always, kind of, prophesizing, hey, I'm looking at this, or I'm looking at that. And so, lo and behold, speaking about Tesla, they go Tesla right now. Some of the popular stocks that are people talking about today. All right, I spoke about AMTX earlier today. I was posting that stock actually doing pre-market, because it was up and kicking butt. It was up like near 80% during the pre-market alone, right? And so again, that's pretty awesome. And so some of the popular stocks of the day, again, just some of the base stuff the mentors went through that, the courses that they have, the guides. You got different guides that you can check out, different brokers that they have as well. All this stuff is right here at your fingertips, guys. And then again, the WeTrade tracker, whatever you want to track your account, and lock in your stuff, what you've been doing. You want to lock in your profits and and you can do this. And guess what? You can take the beta version for free. And I know there's platforms out there that actually charge you so they can kind of keep up, like a spreadsheet to keep up with your trades, right? Well, guess what? The WeTrade tracker, the beta tracker is for free. You pay nothing. I was paying this one, what they call trade revenue, what it's called. I was paying them like about $20, something like that, $20 a month, 30, 20, somewhere around $30, $40 a month. I'm like, man, shucks, I can use this for free now. All right, so no more having to go through all that stuff and just doing a regular spreadsheet through Excel, right? Which is kind of very, cost in terms of time, right? When they already have a pretty much a platform set up in a template where you can just come right in, plug in your trades, and keep up what you've been doing, your performance, so to speak, trade over trade, right? So get excited for that, right? So again, you got the blogs. We do a lot of video blogs as well. It's definitely Jake. And also Brad. Brad goes live every day at 12 o'clock, right? Every day around 12 o'clock lunchtime, he goes live, give you a little midday breakdown of what he's seeing in the market, especially the OTC stocks themselves, and just overall, just general, geopolitical values that he can add to kind of, bring some content and clarity to the family. So definitely check those guys out. Again. Jake always does like a nice little vlog or a podcast, if you want to call that, but a video I guess they call it a vlog. Right, so they always have some good stuff to talk about with that. So be it crypto, be it regular stocks, whatever the case, we have some good data to share and provide for you guys as well. And the great thing I love about it too, those guys are super, super awesome and approachable. So if you got some content you would like to add, well, guess what? They'll get you hooked up, and you could put your content on here. And that's why I love those guys over there, because again, it's the idea that they're being very open in the value of the community sense, where they are understanding that the traders is the community. These are the people who make the platform what it is, and the more they can showcase your talents or anything that could be beneficial to other traders that may want to that may be behooving to your knowledge, well, guess what? They're going to provide you the platform to do that, right? And they ain't charging you for it, right? Like a lot of these other ones, like Profitly, and y'all know the ones out there where they trying to charge you arm and leg. Even Ross Cameron, Warrior Trade, not nothing against that. You guys earned the right to do that. But again, if you just starting out, you want to go through all that, paying all your money, well, here's a great community you can start out at, and you have already a nice little platform that you can come in that does not necessarily, you have to pay for it. And you still get a lot of the same things that the other platforms like Profitly, all of them have that they charge you for. Because trust me, I know about those platforms too. Right? And this one here gives you a track and all that for free. So all I'm saying is, hey, it's a no-brainer. All right. It's a no-brainer. Right. So again, check us out, get going. And like I said, as soon as I get this moving behind me, I'm going to really ramp up my mentoring over there too a lot. I just got started a little bit, then all this stuff happened. But as soon as I get this behind me, I cannot wait. Right. I am going to be a madman through my little mentoring sessions, really ramping that up. So just be on the lookout for that as well. Right. Your brother African Emporium. All right. So, all right, guys, that's that. Get excited. All right. I'm just trying to show some content. All right, guys. So I'm getting ready to get up and make my moves. Again, my trades are pretty much looking good. I don't have anything crazy right now that I need to be worried about. Make sure I do set all my stop losses. All right, so I don't have that issue like I had. That was that last week Friday. I forgot to set my trailing stop, and the stop did a reverse, and bro, man, it could have got ugly. Right. The good thing I had my nice little balance, setup that day too, so I was able to kind of still walk away profitable for the day, right? Until after hours, then I got tore up a little bit, right? And then what? No, it was Thursday or Friday, one of them. Anyway, y'all know the deal. All right, guys. So, if you have any questions, me again, hit me up in my inbox. Whatever you need to do, I got you. Any information you need for the challenge itself, let me know. I got you with that as well. All right, so I am going to get ready to share my screen and head for the door in a little bit. All right, guys, power and profit. All right. Let me get CNBC up and popping like I always do. And, let this day continuously unfold. All right, let's get this volume up over there. All right, so we should be ready to rock here. Make sure. Hold up. Make sure we're good to go far as. Okay, yep, so it's on. Yep. It is on. Yep.
Warren Buffett weighing in on a possible trade war and much more in a wide-ranging interview with Becky Quick this morning. Becky joins us now from Omaha with more. Hi, Becky.
Hey, Ty, it's great to see you. Things are looking a lot better in the markets than they were this morning before the open. At one point, we were looking at the Dow futures down by about 500 points. At that point, people were thinking that the Chinese might not have actually even send their delegation here to continue the trade talks this week, and that had people assuming the worst.
If we actually have a trade war, it will be bad for the whole world, and could be very bad depending on the extent of the war. But there's times in negotiations when you talk tough. The one thing you can't do though is you can't shake your fist first and then shake your finger later on. I mean that is not a technique that works well.
What?
The Chinese have said that they
are
sending the delegation. That has calmed a lot of things in the market. Okay. That might be why you're seeing such improvement in watching the stock market to this point. Aside from that, you also have Bill Gates telling us this morning that this is a situation with all the heated rhetoric. Most people are still assuming that logic will prevail.
Markets up until recently were assuming this deal would get closed. Right. So that's a little bit why you see the delta, the rational thing would be for a deal to get closed. And I'd still rate that as likely.
All our interview this morning coming at the end of the Berkshire Hathaway annual meetings that took place this weekend. All kinds of people come to this, 40,000 shareholders and plenty of business leaders along the way, including Tim Cook. This was the first time to come to the annual meeting for Tim Cook, the Apple CEO. He did that, of course, because of the large stake that Apple that Berkshire Hathaway has amassed. But we spoke with him this weekend, got the chance to sit down with Tim Cook and talk a little bit about things that are happening in his industry. We did talk about how Washington is really eyeing technology, additional regulation coming there, and even the potential for breaking up some of the big tech companies. Cook is a little bit ticked off that his company gets lumped in with some of the bad players in his industry.
I'm frustrated that tech is painted as monolithic. Tech is not monolithic. That would be like saying all restaurants are the same or all TV networks are the same. You know, they all have their own personality and characteristics and so forth. And so if you look at Apple, we're large and we're geographically in the same location as a lot of tech companies. And that is about the extent of the commonality. Well, market cap may be another one, perhaps. But put those aside. I don't think anybody would call us a monopoly, or anybody that has a very deep antitrust kind of mindset. Because you look at our share, we have 15% share in the world on smartphones and 8 or 9 on personal computers and so on and so forth. And so the share is clearly not a dominant kind of company, or dominant market. That's different depending upon which of these companies you look at, right?
Now, Cook never named Facebook as the bad player, but it's pretty easy to draw that comparison when you hear what he says about privacy and the huge distinctions that he's made in terms of privacy that Apple protects and the privacy that other companies are really getting waylaid on. And Facebook has to be the prime one that you start to think about. Cook did say an awful lot in this interview about how hard Apple works to protect privacy and why it thinks it's really their responsibility to make sure that the consumer's privacy is protected. They just see that as key mission. Kelly, I'll send it back over to you.
Becky, I want to jump in with an observation, not a question. And it's that I've been watching a lot of the NBA and a lot of sports lately. And Apple is doing something which is very qualitatively different in their advertisements. They are advertising their commitment to privacy. They are not at all, it seems, advertising a product.
No, and that's his point, Tyler. You're right. I've seen those same commercials where they run it. It's like, just as privacy is important in every aspect of your life, shouldn't it be important for your phone too? They are really out there with this message. They are really trying to make sure that they are drawing a distinction. I think part of it may be because they're so frustrated to kind of get painted with that same broad swath of all the other technology companies that have gotten in trouble with Congress and with the regulators over the EU and other places. They want to stand out and say that this is not what we do. Tim Cook, in our interview, but also other times I've heard him say it, look, privacy is not our customers are not what we're selling. Other places, you know, our products are there, and it's our responsibility to protect our customers' privacy. Other companies, the customer is their product, the information that they're taking from those people.
Becky, thanks very much. Appreciate it. I would say that
thanks, guys.
The Apple ad I've seen lately is one that looks like an episode of Planet Earth. You see, it's just montages of forests and snakes, and I don't know what they have good cameras too. Chip stocks are on pace for their worst day in 2 weeks. They're still up about 32% this year. We'll talk about how to trade through from here. As we head out, the market is trying to make a comeback today, but 3 sectors in particular are getting slammed. That's tech, materials, and industrials, all down 1% or more. Dow DuPont leading the materials decliners. Deere and Stanley Black & Decker feeling the losses in the industrials. Stay with us.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Semi-stock sinking today, a casualty of increasing trade tensions between the U.S. and China. After racing 32% higher in 2019, is it time to back away from the chips? Harry Wald of Oppenheimer and Gina Sanchez of Chadico Global are your Trading Nation team today. So, Harry, obviously this has been a leadership group off of those December lows. Started to wobble a little bit even before this week, but how do they set up for you right now? Do you buy this dip or not?
We think you do. Yeah, we're in the camp that this pullback is viable. And one of the reasons why, and I guess framing the environment that I think we're in, it looks a lot like 2013 and 2016 to us, speaking in terms of the Philadelphia Semiconductor Stocks Index. This was the last time that the index punched through year-long resistance after at least a 20% decline. And in those prior periods, the index went on to rally for at least another year, and pullbacks were viable. So I think that roadmap sticks, and it's very simple for us. The assumption is that it does, as long as the breakout holds, as long as you're above the breakout at 1445, which was the January 2018 peak, you buy the pullbacks, and this long-term uptrend continues.
All right, that would suggest that, every 3 years you get one of these chances. Gina, how do they look to you here? Obviously, you have to filter in a view on China and also where the chip cycle is.
You got it. So obviously, you have to assume that this China noise goes away. If you take that assumption, then you also need to buy into the idea that chips should be recovering by the second half of this year or the first half of next year. That's the current rhetoric. But if you look at the chip stocks, this is really idiosyncratic. And I'm not sure that we would recommend trading this as a group, because each one of these stories often trades against another chip stock. So you have to be careful about how you trade this. But generally speaking, the assumption is that chips recover by the second half of this year or the first half of next year. So you're going to be in for a rough ride between now and then based on trade.
Usually a jumpy group has been a bellwether for the overall market. See if it continues to be so. Ari and Gina, thank you very much. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. And Melissa, send it back over to you.
Hi, thank you, Mike Santoli. Stocks now well off of the session lows, trying to make a comeback right now. Should you buy on this drop? Where the opportunities are right now. Plus, bombshell news about Boeing and the safety features of its 737 MAX jet. And Wall Street's smartest minds meeting at the Sohn conference to unveil their next best investment ideas. We'll head there live to break it all down. That's all ahead on Power Lunch.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Volatility spikes are notoriously difficult to forecast, but when they do occur, they tend to be relatively short-lived. So rather than try and predict the next spike, instead consider positioning your portfolio for when volatility comes back down. I'm Joanna Payne, and Schwab is the better place for traders.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. The Mississippi River is rushing through a key levee in St. Charles County, Missouri, that is just north of St. Louis. The National Weather Service says the levee was breached earlier this morning. People living in that area have been asked to move to higher ground quickly. A new United Nations report says 1 million species of plants and animals are in danger of becoming extinct. The UN says species are being lost at a rate tens of hundreds of times faster than at any time in the past. However, researchers say it's not too late for human beings to fix the problems causing this wave of extinctions. And the president's one-time attorney, Michael Cohen, is now in prison. He reported to a facility in upstate Otisville, New York, just a few hours ago. He will serve a 3-year sentence for campaign violations. Pope Francis is in Bulgaria. He's helping to celebrate the first communion of Catholic children in that European nation. There are only 60,000 Catholics in Bulgaria. 80% of the country is Orthodox Christian. You are up to date. That's the news update this hour. Melissa, back to you.
All right, thank you very much, Sue Herrera. About 90 minutes until the closing bell rings, and quite a comeback we've got in our hands. The Dow Jones Industrial Average has been down as many as 470 points at the lows. We're now down 150 or just over 0.5% right now. The NASDAQ was down 2%. We're now off 0.8% or 65 points, and the S&P 500 is down by 20. Kelly.
Let's check on some of the other market movers, including Sinclair Broadcasting, which is soaring today for its biggest gain in 10 years to send that stock to a record high. The company is buying 21 regional sports networks from Disney for nearly $10 billion. Disney had to sell the networks as part of its deal to buy Fox. Look at that 35% gain for Sinclair to over $60 a share. Different story for Churchill Downs, which is lower today after that controversial Kentucky Derby, where the horse that crossed the line first was disqualified. That gave the win to Longshot Country House. Churchill Downs is $165 million was bet on the Derby from all sources. That was a new record. The shares are down 2.5%. And we end with the check of Beyond Meat, which is higher once again and getting close to triple its IPO price of $25. It's 6% higher for over $70, $71 a share. And a wild day for crude oil. Prices there are closing. Let's get more from John Chu with the commodity desk. John.
All right, so Kelly, part of that story Melissa was talking about, the market turnaround. We're going to start off with the headlines here. Oil prices are actually in the green right now. West Texas Intermediate up by about 0.75%, $62.39. It was as low as $60.04 overnight, meaning a 3% decline. That's reversed to a near 1% gain. Brent price, the same story, 71.36 there. It was 68.76 at one point. Those prices have been trading pretty much higher all day long. Some traders point to increased tensions in the Middle East as the U.S. is deploying the USS Abraham Lincoln Carrier Strike Group to the Middle East in a show of force against Iran. And now we have headlines out of Reuters just this hour with Secretary of State Mike Pompeo saying he continues to see Iranian activity that makes America think escalation is taking place. That's putting a bid to oil prices again. Now, earlier, the story in energy markets was that conflict, that tug of war between downward moves in oil because of what may be happening with faltering U.S.-China trade talks and the bullish geopolitical story out of the Persian Gulf. As of now, it appears as though more emphasis, guys, being placed on geopolitics in Iran. Tyler, back over to you.
All right, thank you very much, Dominic. The whole market taking a hit today on those China trade worries. But which sectors could be hit the hardest if trade tensions do escalate? Seema Modi has been taking a look at this for us. Hi, Seema.
Hi, Tyler. As we discuss the U.S.-China trade discussion, it's important to note that the U.S. imported nearly $540 billion in goods from China in 2018. The top three sectors, well, technology, which includes computers, electronics, and chips, made up $186 billion, or about 30% of that, followed by manufacturing, machinery, and industrial goods at around $120 billion, and clothing at $30 billion. Now, the big question is, which companies would most be impacted by these renewed trade tensions and higher tariffs? Now, analysts say within tech, it would certainly be the semiconductor stocks. These are names like Skyworks, Qualcomm, and Micron, which make up over 50% of their revenue in China, according to Goldman Sachs. And as we discuss industrials, Boeing, Cummins, and Caterpillar come to mind. These companies do rely on growth in China. Lastly, are the consumer-driven names like Nike, Tapestry, and even Wynn Resorts that have been betting on China to drive future growth. Wynn Resorts drawing over 70% of its revenue from China. The market reaction today shows that it's these companies with high exposure to China that are faring the worst, though they are off their lows. The big question will be this Friday, if tariffs are increased from 10 to 25%, it's these type of companies that investors will certainly keep an eye on. Guys, back to you.
All right, thank you very much. Seema Modi. Stocks down on those trade worries, but the market has had a big run up this year. The Dow up about 13% so far in 2019. So is today's little dip a buying opportunity with the Dow Industrials? Look at how far they've come back, now down just 133 points. Let's bring in Sandeep Bhagat. He is a Chief Investment Officer with Whittier Trust, and Jim Paulson, Chief Investment Strategist with the Luthold Group. Sandeep, for U.S. stocks, let's just say global stocks, but particularly U.S. stocks, do you see green lights, red lights, yellow lights?
Green lights, the fundamentals are very strong. Just think back to December. What were the big fears in the market? It was that the global slowdown would take its toll and result in an impending recession, and that the Fed would be on its way to committing a costly policy mistake. Those fears have receded dramatically, today notwithstanding. So we'll come back to the tariffs in just a moment. But first quarter GDP growth was in excess of 3%. Jobs growth has been nothing short of remarkable. We added 263,000 jobs in April.
Corporate profits have been good.
Corporate profits have been good. So the fundamentals of the U.S. economy are stellar, and they don't signal any recession on the horizon. In fact, it is this very strength that has emboldened the U.S. party in its trade negotiations, because they want to leverage this renewed economic strength to extract greater concessions.
Jim Paulson, same question for you. Do you see green lights ahead for U.S. stocks, reds or yellows?
Well, I agree a lot with what he said. I'm kind of a green light too right now. I would say this, Tyler, just to add on to what he's saying there. I look at valuation day, and the forward and trailing P multiple is just slightly above average right now from where it was since 1990. And it is basically where it was at the end of the 2015-2016 slowdown and pullback in the stock market that occurred. And that was followed, of course, by the big rally in 17 into 18. So I think values are good. And I look at this. So far, the rally is because we paused overheat.
Not good.
The Fed paused.
Of course, you're going to see green lights.
Inflation came off.
Bullish.
And that's created a big rally valuation based. But I think the next catalyst here could be that we not only agree that we're not going to recess, that's kind of already come out, but we start to notice that earnings don't just do better than feared, but they actually start to reaccelerate. And growth turns out stronger than expected. And if you have rising earnings where the 10-year Treasury is still below 2.5% or 2.5%, and the Fed hasn't started tightening, inflation is still sub 2%, I think there's quite a bit of upside room for even both the multiple to go even higher, maybe to 20 times earnings, as well as 20 times trail, as well as earnings actually start to climb as well. So I do think there's upside yet.
So you're both green light kinds of guys, but Sandeep, let's say tariffs actually go up to 25% from 10%. Let's say another round of tariffs go into effect on the rest of the goods that we bring in from China. Given the market reaction today, which is very, very muted to President Trump's threats, could you say that you would still be green light even if the tariffs were put in place?
Yeah, I think so. All this does, it pushes back the resolution. The end of this saga gets postponed a little bit, but it does not change the end game. And that is for one really simple reason. No one wins in a trade war. And to fully engage in one would be incredibly foolish. So yes, out of implementing the threat, we could have a couple weeks or maybe a month of these additional tariffs. Sooner or later, this will get resolved. Calmer heads will prevail. And in fact, the weakness today or anything that ensues in the following days might actually be a good buying opportunity.
Jim, this morning Warren Buffett said he was most surprised that with full employment, a growing budget deficit, that the long bond was only at 3%. And that if it stays at 3%, stocks are ridiculously cheap. Do you think it stays at 3%?
Kelly, I think I agree with that. I think with yield, the 10-year Treasury around 2.5 and trailing multiple at 19, and inflation sub 2, you could easily see multiples above 20 times earnings. They've been there a lot since 1990. They've certainly been there or better at different times in our history with any kind of remotely close environment like this. So as long as we stay in this area, I think there's upside room on values.
As long as we do, but I'm asking if you think we will.
That's right.
Yeah.
I think eventually, Kelly, yes. I think growth's going to be stronger than we think here in the second half. We might stay around 3% this year. And if we do, with the unemployment rate already below 4, we're going to see a return of overheat problems. Wages maybe into 2020 head towards 4%, and we have to push 10-year yields back above 3, and the Fed gets back in the game. So while overheat's been paused, this is an opportunity. I think it's going to come back, and probably by 2020, we're going to be dealing with some of the same issues we had in 2018 again. Okay. But it could be from a lot higher levels than we are right now.
Well, 4% wage growth sounds pretty good to a lot of people. Jim Paulson, thank you very much. Sandeep Bhagat, thank you very much. I appreciate you being here. Fantastic.
Great to be here.
Interest rates on the move. Rick Santelli tracking all the action from the CME. Rick.
You know, they're on the move, but they're in awfully tight ranges. Consider there's some slight curve flattening impressions going on. 2 years are down 3, 10s are down 4, 30s are only down 2. So really the knob, 10s to 30s being traded here in Chicago. Look at a 2-day of 10s. And Melissa Lee's absolutely right. It's been a little crazy. But once the craziness ended, we've kind of gone sideways a bit. Lots of trading, but in a couple of basis point range. Look at a 1 month of 10-year on top of 1 month of the S&P 500. You know, that drop in rates from the 260 area certainly didn't hurt stocks, and they've relinked again, as many markets do as fundamentals change. Finally, the last chart, dollar index gave up pretty much all of its flight to safety value today. It's hovering just above unchanged, but even unchanged, still 97 handle. The yen still has a bit of strength as we continue to monitor how investors are dealing with complete uncertainty as what lies ahead for trade. Kelly, back to you.
All right, Rick, thanks very much. Rick Santelli. Wall Street's smartest minds gathering at the Stone Conference in New York to unveil their next best investment ideas. That means they're not the next best, but just their anyway. A number of stocks are moving sharply after hearing these presentations. Look at 3M and Chemours in particular. Chemours now down more than 6%. We will go out there live to break it all down. And it could be a wild couple of hours heading into the close. Stocks are making a big comeback, but the Dow was down 471 points earlier. We're down 122, and we're back into it.
Right now, stocks are still down, but well off the worst levels of the session. Good day to be talking to some of the biggest names in investing. Leslie Picker joins us now from the Sohn Conference in New York City. Leslie.
Hey, Melissa. David Einhorn today with a longtime Tesla short position opened his presentation with a series of Elon Musk quotes. He said that they were meant to show Musk's broken promises. And then at the end, Einhorn put up a poop emoji over Musk's face. But that was really part of his presentation that he then pivoted the conversation toward his suggested trade, which was really a long in AirCap and short in GATX. He says this is emblematic of his overall thesis, which is bullish on airplane leasing companies and bearish on rail car leasing companies. Later in today's presentations, Larry Robbins of Glenview gave an impassioned overview of the healthcare industry right now against the regulatory backdrop. He said the odds of Medicare for all becoming law are less than 1% and urged investors to short a pharma index or pharma ETF because he said the one issue both Democrats and Republicans can agree on is that drug prices are too high. He then recommended longs in HMOs and hospitals, and he also urged investors to short Chemours and 3M over what he described to be their litigation risk related to the chemical PFAS. These chemicals serve as a binding substance in industrial products, but if they leak into the water supply, they can be unsafe to drink. And so Robbins says the lawsuits are accelerating against 3M and Chemours, which could amount to billions of dollars in losses that they have not yet appropriately reserved for. Other interesting picks today have included a short in community health systems, a long in Zillow, and a long in Cabot Oil and Gas. And guys, we still have many more presentations to watch as the event rolls on. Back over to you.
All right, Leslie, thank you very much. To Kayla Tausche, we go with some breaking news on those trade talks. Kayla.
Now, we have learned that the Chinese delegation does plan to come to Washington definitively this week for a potentially final round of trade talks. We are trying to get some more detail on exactly what we could see later this week, whether that delegation will in fact be helmed by the Vice Premier Liu He, who senior administration officials have called the closer. If in fact Liu He is the one who comes with this delegation, that could portend a more positive outcome at the end of the week. We're also awaiting news on the size of this delegation. China had been expected to send a 100-person group to Washington as a sign of good faith for this round of negotiations. One of these sources briefed on the status of talks says to expect a smaller group because of some of these escalating tensions, but that we should still expect to see a group of Chinese officials here in Washington to discuss trade this week. Back to you.
Just looking at the markets, the Dow's down less than 100 points right now, 92. Kayla, it was earlier reported, going back to last night, that this meeting may not happen. You had firms like Goldman saying, if it doesn't, then all of a sudden you talk about those tariffs looking like the base case, the 25% tariffs. So now unwinding that, if they are coming after all, maybe we bring down the prospect of those going into place.
Right, and to be clear, Kelly, in most of these situations, all of that handicapping ends up being wrong because it's anyone's guess what the outcome will be. In 5 days' time, that's like 20 news cycles here in Washington. And so I say that my sources are briefed on the current status of talks because there's always the caveat that President Trump could decide he isn't happy with where things stand in trade talks. He could decide he doesn't want the delegation to come. So as always, this is a fluid situation, but as of right at this moment, there is expected to be a delegation coming this week.
Yeah, it's like 100 news cycles lately. Kayla, thanks very, very much. Again, markets with the Dow opening down about 471 points this morning have now staged almost a complete comeback. The blue chips are down less than 100 points. There's the NASDAQ still down 0.5%, but that 45-point decline. There's the Dow down 86, about 1/3%. So it is the outperformer today. S&P 500 still down 13. We'll have more right after this.
Wow, they're pumping the market. They are pumping the trash out of this market. And that's what they did back in December. Again, these people are relentless to prove the market, to be right and exact how they want it to be. unless you know that it's very lopsided, because the amount of capital that sold off didn't just turn around and buy the market back. Because why would you lose your average positioning at a lower price just to buy back in for a small little bounce and not know that the market still has a lot of uncertainty surrounding it? So it lets you know where all this excess liquid capital coming from. So this is the part of the market where people kind of get lost in translation. And it's the fiat currency that they're pumping into it from the Federal Reserve. It's just fake money. It is pulled out of thin air and they'll just inject it into the market, as another form of what they call quantitative easing, or just stimulating the market, so to speak. And this is why I was saying earlier, you can't fight the market. Right? The market's always going to be right, even though when it's just blatantly wrong, because again, it's very manipulated. A lot of people don't like to deal with that aspect, but it's a very manipulated market because again, people who are very greedy in the terms of the in the true sense of the word of a greedy capitalist mind, they're concerned more about the stats and what they can harbor away from other people than they allow the market to kind of have this natural ebb and flow, how it normally supposed to run, through natural growth and organic growth, companies doing what they're supposed to do and not just buying back shares because they don't have any kind of new innovative products and stuff like that to keep up with their competitors. So that's pretty much been the entire story for this entire year of trading thus far. It's been a whole lot of just fluff earnings, fluff buybacks, fluff data, skewed data, and these companies really just been lackluster. I've seen nothing out there to really say, man, this is some great growth, great growth. It's just been a lot of just buybacks and just, skewed data, and that's the difference. Like 2017, you actually saw even near the front part of 2018, you saw some real nice earning beats, some good organic growth. I mean, you saw some real raw data. Now
here's
everything
a
else is
3M
fluff and
taking a
skewed.
hit. Glenview's Larry Robbins urging investors to short 3M over what he described to be their litigation risk related to the chemical PFAS. Let's get the street's reaction to Robbins' call. Joining us on the CNBC Newsline is Scott Davis of Melius Research. He's got a hold rating on 3M, a $227 price target on the stock. Scott, great to have you with us.
Happy to be here.
He's making the comparison to an Aaron Brockovich kind of situation where they might be tied up in litigation for years to come. What's your take on Larry Robbins' claims?
Well, I'll tell you, I've known Larry a long time. He's pretty sharp, and assuming he's done his homework on this one, I haven't read anything he's put out there yet, but if he's done his homework, he could have something. We don't really know. I mean, these PFCs are toxic.
All this right here,
called forever chemicals because they just don't break down naturally. So once they're in your water system,
right here,
it's almost impossible to get rid of them. And so,
in
theory, yes, these lawsuits could be rather large. It's just really hard to know how much.
Right.
One of his points is that 3M, just 12 days after filing their 2017 10K,
they constantly,
$850 million.
They just pretty much got ousted. They pretty much
negligent, had contaminated the water in the
criminally negligent
years. New Jersey
for those crashes out right now because they knew about the fix and didn't fix it. And yet still, look at the people. Just look at this criminal money right here.
The litigation claims were
look at that. This one volume bar right here.
I mean, I looked through asbestos of many years ago. And
again, that's why this market, you have to be very cautious. I'm down like $15 now. I'm up like 70 something.
I think the company is doing its best, at least, to communicate a scenario, an outcome that is likely not going to be reality, but at least as a scenario. And I think investors have to decide what they're willing to take.
Like
It's a big company. I mean, even if Larry's right, it's not fatal to 3M in any way, shape, or form, but it will certainly cost some cash flow. I think it's just very hard to know exactly what you're going to get. And, when we lived through the asbestos fears of many moons ago, things just got worse and worse and worse.
Yeah. Is this a stock that's in the penalty box for a long time? You just wouldn't buy it?
I don't think you need to own it today. When you look at the quarter, they put up one of the worst prints that we saw in all of industrials, -1% growth in a group that did close to 5%. They put up negative 160 basis points of margins in a group that had up margins in the quarter, -11 EPS in a group that was up close to 10. I mean, the execution on the core operating line isn't there. And then if you throw in the lawsuits on top of that, then it doesn't make for a very interesting stock right now.
All right, Scott, thanks so much for sharing your analysis of 3M with us. We appreciate it. Scott Davis of Melius Research. Check, please, is next.
Keep in mind, guys, this right here, these are 5-minute candles right here. These are 5-minute candles here on the spot. So you have 1, 2, 3, 4, 5, pretty much what? About 6 5-minute candles. Basically 30 minutes of so-called non-stop buying. You mean tell me you have no one selling inside of there? Again, this is the stuff we talk about. That's straight melt up. That's what we call a melt up right here. That's what they call a melt up. Straight illegal. Because that's market makers obviously adjusting the ask always higher than the bid, even though there may be people trying to sell more than what they're showing, and they're gonna count it as, you know, a bid buy-in price to keep the price melting up, which obviously detours a short seller because he's trying to obviously gauge the ask and whether or not he has more volume there than on the bid side, which shows that there might be a pause in buying for a moment. So it keeps it so lopsided to the point where the put buyer or the short seller don't have a clear indication from the level 2 or even watching even time and sales enough to kind of make a solidified, type of position on a trade to kind of, balance it out. Like you see right here, so you got a little red in there mixed in there, even off this big, wild bullish engulfing candle here, which is illegal. You still have some kickback here in the point where it pulls back. This right here, nonstop here on the back end of the day, that's straight illegal. That's straight trash. That's straight manipulation. Right? And that's because, again, if you look at the 20 EMA here on the 5-minute chart here, how it got above 20 EMA, and again, you had pure extension right here. Typically, you don't have that kind of extension unless there's an all-out just blitz catalyst to the market that calls. There ain't nothing coming out the market that calls the blitz catalyst where you will have that kind of separation from the 20 EMA up this high from there, that length right there. So that lets you less fiat currency, pretty much fake money. Please. In a lot of ways.
Welcome back. Pretty dramatic turnaround. We started off the trading week with the Shanghai Composite down 5.5% after the president's tweets about China and those talks not going well. Now you have a market where the small caps have almost turned positive, probably have now. Dow's down 63 points after Kayla's report. A small delegation
they're not going to stop until they can get it all the way back up into 294.
It began as a holy, what kind of day. It's now become a whole kind of day, really. A 57% decline is really nothing.
Because they know that's what they call fake money winning the market to protect their little portfolios. And again, nothing wrong with that. But this is why I'm always saying be very cautious. A lot of people like, man, I'm going to short this market like crazy today. A lot of people like, man, I'm going to short go hard and buy a lot of puts. I'm like, whoa, be careful.
But who knows? I mean,
always be careful because you're fighting a machine that you cannot beat against. You're not going to get the follow through that you really deserve. They're going to cut your, they're going to cut your opportunity to have the real follow through and the real dump, so they can always protect their long-term portfolio. You can't fight against the big
low interest rates, and keep in mind that historic valuation. You take a look at PEs. It's important to keep in mind with low interest rates, PEs can be more like 17 or 18 here. And that's pretty much where we are.
Exactly what we heard from Warren Buffett this morning as well. And Derek Scissors, by the way, said doesn't have to be tariffs. It could be the enforcement tool. We could do sanctions. We could do export controls. Check that out.
Thank you very much for watching Power Lunch.
Closing bell starts right now.
Good afternoon. It's the Final Hour Trade. I'm Wilfred Cross.
I'm Sarah Ivan. Big question today. Could we actually close positive
this one right here,
after trade war fears have stopped sinking this morning?
So bad.
The details on negotiations with China.
She had no balanced approach about the market.
Rick Reader will tell us whether today's snapback could be a sign of resiliency in the markets.
And short seller Carson Block will join us exclusively to discuss a new firm that he is backing. Closing bell starts right now.
Welcome to the closing bell, just under an hour left to trade. Let's check in on the market action. An intraday chart of the Dow for you. We are pretty much at session highs. The low was close to 500 points at the open in the negative, down 471. Currently down just 56 points or 0.2%. If we snap into all three of the major indices, they're all in the red still, but only just. The Russell does outperform, is only down. It is slightly higher, and in terms of the sector performance, we now have two in the positive. Energy and healthcare had all of them negative for most of the session.
There's really been a recovery throughout the session, especially after sort of the overnight markets closed. China got hit pretty hard.
And we just got news from our Kayla Tausche that there is going to be a meeting this week. The Chinese are sending a delegation. Unclear how high level that is going to be, but that's a positive.
Absolutely.
Given some of the
And you're right to mention China down over 5% for Shanghai, Shenzhen down even more. So relatively speaking to that, even the open was better here.
Because if it ain't the right device premiere,
been a bit of theme. They get hit harder than we do. Let's get right to our reporters following all the market action. Bob Bassani has the biggest movers here at the NYSE. Kate Rogers is uptown at the NASDAQ for us. Kayla Tausche, as mentioned, in Washington with the latest on trading. Kayla, we'll kick it off with you and what you've learned.
We've just reported in the last hour, Sarah, that it does appear that the Chinese are committed to coming to Washington for trade talks this week, according to two sources who have been briefed on the status of these talks and where things stand at this very moment in time. There are a few key pieces of information that we are still seeking. The first is the size of this delegation. The Chinese have been prepared to bring up to 100 officials with them this week to Washington. One source says that we should expect a smaller delegation because of the tensions that have erupted between these two countries in the last week, and also whether this delegation will in fact be helmed by China's vice premier and special envoy, Liu He. Senior administration officials have previously described Liu He as the closer, with the expectation that he would be the one to negotiate a deal on behalf of China's president, and that deal in principle could be reached as soon as this week. If he were not the figurehead of this delegation, then I think the market would take that as a negative sign, because it would signal that there is no one senior enough that would be coming to the U.S. to make a deal in fact. Now, China would still be committed to sending a delegation to continue talks, if only to keep the conversation open. So those two details are going to be important. We've also reached out to the White House, the Treasury Department, and the Office of the U.S. Trade Representative. At this time, we have not heard back on comment for whether those agencies or the president would entertain the Chinese for these talks based on what has happened behind the scenes in the last week. So all of that is very important detail, but the fact that China remains committed to these talks could be seen as a positive, if a cautious positive, and we'll see what more details we can learn in the coming hours.
Kayla, you've been covering all of these trade talks with various different counterparties very closely. Was there anything to draw from the negotiations with Mexico and Canada as to whether the president upped the rhetoric seemingly in a very worrying way, only for a deal to be done soon after?
Well, I think that there is some reluctance on behalf of the economic advisors at the White House and various agencies involved in them to have all of these trade fronts open at once and all of these conflicts simmering, especially as certain dovish officials are trying to put out market fires going into the 2020 election season. One reason why this week is so important for the China deal is because administration officials have previously been saying that they want to be able to put the China issue to bed, at least for now, so that they can pivot to Europe ahead of a May 18th deadline to potentially announce next steps on auto tariffs. That would be major news for not only negotiations with Europe, but also Mexico and Canada. But Wilfred, it's important to note that we still haven't seen the White House send the new NAFTA deal to Congress. That would start a 90-day clock, and that hasn't started yet.
Okay, Kayla, thank you very much for that. Let's get to Bob Bassani on the floor here at the Stock Exchange for more on the major turnaround stocks have seen intraday. Bob.
And the stock market, part of the tenets of why we're at a new highs is the market believes that not only China's bottom, but a trade deal is going to happen. And this happened again today. Just take a look at your typical examples. Caterpillar Standard, the low print right at the open, 134. It's come off of that. As you can see, sitting right near the highs for the day. All the major industrials behaved exactly the same way. It doesn't matter. You can put up Boeing. Boeing was about 365 right at the open. Same situation. It moved up now. 371, 372.
And this should not be moving up of all of them.
A lot
after
of
that criminal
here,
report
that
came out.
Escalating trade wars would dramatically increase
Again, these
the
people
input
can tell
costs,
us
and some
ain't no
stocks are down
morals and money.
another. So if you look like a Stanley,
there's
Black
no morals
Decker,
and money.
SWK, for example, another good example.
None.
Off of the lows, the low print.
So always
right
protect your backside. Always protect your backside, your
real
purse.
Impact if there's a trade war. The beneficiaries of trade wars, well, there's a whole bunch of them out there. Think of Archer Daniels Midland.
That stock should be down like 350.
For example, how they
Boy,
would benefit
after that report that came out about them over the weekend, easily.
soybeans
Anybody else
or
like
corn
Chipotle,
or wheat
something like
here.
that,
There's a company
that
has
stock
a
would have been down like
direct
30, 40
stake
bucks.
kind of thing,
They're
and
not
you
going
can
to
see
they
it too
refuse to let that stock
blueprint
fail.
for the beginning of the day. So a lot of stake down here in the trade war. Back to you.
All right, Bob, thank you. Let's go to Kate Rogers at the NASDAQ with some of the movers up there. Kate.
Hey, Sarah. Right now, the NASDAQ is down just under about 0.5%. We were down as much as 1%, and we had been pacing for the worst daily performance since March 20th when the index fell 2.5%. But year to date, we're still up nearly 22% so far. And as you guys mentioned, the Russell 2000 also just recently turned positive in the last few minutes. Now, a lot of movement today, of course, in the tech and semiconductor stocks on the news that President Trump is increasing those tariffs on Chinese goods come this Friday. Apple today down about 1.5%. It was taking just under 15 points off of the NASDAQ 100. Other tech names, including Amazon, Microsoft, Facebook, and Netflix, also weighing heavily on that index today. Some of the biggest laggards today, percentage-wise, in the NASDAQ 100. Chip names again: AMD, Applied Materials, Microchip, Micron, all down, between 2 and 4% today. Other names in the tech and chip spaces also taking a leg lower included Intel, Qualcomm, and NVIDIA, all down under 3%. Just an hour ahead of the close, guys. We'll be back with more. Back over to you.
Okay, great stuff. Thanks very much for that. Meantime, some breaking news on the Fed. Let's get to Steve Leisman with that. Hi, Steve.
Well, thanks very much. The Federal Reserve out with its new financial stability report, the second edition, to come out twice, 2 times a year. The Fed saying that asset valuations are high relative to historical ranges, and investors are showing a high appetite for risk. Equity market prices somewhat elevated, but real estate cap rates,
somewhat. No, them prices are elevated.
Price of real estate at historically low levels. Borrowing by
they refuse to tell the truth what the data says. The data says high risk market, very overvaluated companies.
The Fed is most worried about the largest U.S.
and they still trying to say, no, there's more room. There's more room.
Capitalize along with
they literally have a lot of people stuck holding the bag. They're gonna have people come into the market right now that's new and say, no, it's okay, buy in right here. And they're gonna just sell off and then help leave them holding the bag.
It amounts to any particular action
quit.
by the Fed, certainly not a monetary policy, perhaps though behind the scenes on a supervisory basis. Sarah?
Yeah. All right, Steve, thank you. Joining us more to talk about the big reversal we've seen today on Wall Street and much more, Rick Reeder, Global CIO of Fixed Income at BlackRock. Rick, maybe let's just pick up where Steve left off. Big headline to me is that there's another warning about the high business debt levels that exist in this economy. The Fed says that credit standards for new leveraged loans have deteriorated. I mean, is this a ticking time bomb?
Damn right it is.
Well, I don't think it's taking time.
It is. Don't say it's not.
Credit.
Oh, see.
Yeah, people have been concerned about the size of the investment grade credit market. Those companies, there's a lot of them.
Credit market been screaming that for a long
big
time
companies that de-lever. That I'm not worried about at all. Are there parts of the leveraged loan market or the parts of middle market lending that you get a bit concerned about? For sure. I think one of the keys for investors today and how you think about things, we're in a reasonable growth environment, not a great one. You got to be thoughtful about credit. Don't stretch. Some of the triple C rated names have improved recently. I think credit is in good shape, but you got to be really careful about stretching.
Rick, do you think credit's going to be in good shape regardless of what happens with the trade talks? Is the U.S. economy fundamentally strong regardless?
So it's a question of how strong is strong. Listen, you've seen all these ISM reports that show an economy that's actually operating at a pretty good level. You saw a GDP report that showed that we're operating at a very good level. Listen, I think people should consider that we're not going to grow as fast as we did when you had this big tailwind of fiscal stimulus. But if you think potential growth in the U.S., which we do, is around 2%, you've got an economy that's growing around potential and actually a bit higher than that. Are we slowing from those elevated levels? Yes, we're slowing, but you've got an unemployment rate that keeps coming down. You've got personal income levels that are still good. You've got spending levels that are still good. And you've got a service-oriented economy that's still operating at a very, very solid level. So it's nothing, I was looking at some of the earnings reports. S&P 500 revenues, 58% of the companies reported up revenues. It's a pretty good number. So it's a good economy. Is it really robust? No, but it's pretty good.
What is the action in today's stock market? Steep drop in overnight futures Sunday night, drop at the open, recovery really almost to the flat line. So what would that tell you about where this market stands on the risk of a trade war and the rising threat that President
banks
Trump
to come
made
in and add more money to make more off these bag holders that's going to come in the next month or two.
We talked about this morning. We added some paper. We started to buy some equities in this morning. And then when it rallies, people say it was an easy trade. It's never an easy trade. Whenever, there was some real volatility this morning. But there's one thing that you have to hang your hat on.
There's not enough financial assets in the world.
It's an easy trade when you have more liquidity than average retail trader.
Forever. The ECB
because
is not going to
banks
move rates for
trade in
a long time.
cahoots the same way
was very clear
small
about
enclaves of retail
traders
traders trade.
We're going to be in a moderate.
One has a bigger purse, the other one is just trying to make the best of a good move.
The demand for
Again,
income
understand
is
the
so
rhetoric when you hear it.
profound. And the demand for, because you think about insurance companies, pension funds, and an
Straight
aging
rhetoric,
population,
that
what
last
happens
point.
is that draws people into financial assets. So the demand is tremendous. You just have to buy when the volatility is high, and just be careful about the types of risks you're taking.
Rick, interesting you kind of went down that line of thinking, because earlier this morning on CNBC with Becky Quick, Warren Buffett kind of said, look, equities are incredibly cheap provided yields stay low for longer. If we've got long rates around 2.5% to 3%, then in a relative sense, equities are attractive. You think we're going to keep those very low rates for how long? 5 years, 10 years?
Well, we're trying to, if we can invest for the next year or two, life is good. I mean, so I think rates, by the way, in Europe and Japan, they're saying, well, for a very long time. In the U.S., things can evolve, but when the next year or so, rates are going to stay very moderate. The Fed doesn't have to do anything. Inflation is going to stay tepid for a long period of time. Technology is pressing on inflation levels. So I agree with the point. If you think about what drives equities, are we going to see a drop in interest rates? Probably not. Are you going to see earnings growth of significant magnitude? Probably not. But can you get multiple expansion because we're in a moderate rate environment and you have some reasonable stability, particularly if you get a trade deal? Could I see some multiple expansion? Yeah, I could.
Okay, Rick, thanks very much. Great to see you as always. Rick Reeder from BlackRock. Now, stocks staging a major comeback intraday after President Trump's new tariff threat sank the market early this morning. But the trade conflict with China doesn't have Berkshire Hathaway's Charlie Munger too concerned.
If we end up with some trade settlement that involves some tariffs on both sides, I don't get excited about it at all. I regard it as part of normal life. Generally speaking, I think a good settlement is better than a lovely world war.
Up next, Becky will join us with more trade talk from her morning with Warren Buffett, Charlie Munger, and Bill Gates.
Still ahead, we'll tell you which companies have highlighted China tariffs as a potential issue during earnings this quarter.
truth.
Welcome back to the closing bell. A wild day on Wall Street as stocks stage a dramatic comeback despite new trade tensions between the US and China. Here's a check-in on the China Trade Index, which weighed, of course, on stocks today. The index tracks companies with exposure to China and is compiled by CNBC editorial based on analyst opinions. It's down about 1.6%, so more than the market is currently. It has recovered intraday like the market, but not to the same extent. Some of the individual names there still down over 1%, or Alibaba down 3%.
Anyone with China exposure, basically getting ahead. Trade with China, obviously the big topic of discussion all day long, including in Becky Quick's interview with Warren Buffett, Bill Gates, and Charlie Munger this morning. Becky joins us now from Omaha with more. Becky.
Hey, Sarah. Hey, Wolf. It's great to see you guys. As you mentioned, we sat down with the three of them this morning. All three of them have done business in China and have invested there. All three of them know a thing or two when it comes down to negotiations, and none of them think that a trade war with China is a good idea.
If we actually have a trade war, it will be bad for the whole world, and could be very bad depending on the extent of the war. But there's times in negotiations when you talk tough. The one thing you can't do, though, is you can't shake your fist first and then shake your finger later on. I mean, that is not a technique that works well.
I think good trade relations are an incredible win-win for both countries. And it's dangerous if people think this is a zero-sum game. And so I'm hopeful that despite the latest announcement, there is a trade agreement and the two countries can find ways to work together. It's the most important relationship in the world. Both sides bring a lot of strengths. So I understand why markets are a little bit worried that these tariffs are going to get higher and higher.
Well, I don't think we want a full-scale tariff war that's just as high as both sides can make it. That would be massively stupid. And if both of them are a little disappointed with the negotiations and feel a little roughed up, that's what they should feel. You want to conduct negotiations so it doesn't look like the other guy has to cave or something like that. The ideal thing is to make a hero out of them and still get the deal you want.
Of course, that will not be an easy task, particularly given the situation, how much rhetoric we've already seen on both sides coming up to this point, and given the massive changes that the United States really wants to make in this trade relationship. We did talk to Bill Gates about what he thinks the odds are in a situation like this, and he says ultimately he still thinks logic will prevail and that both sides will ultimately come to the table and come up with a deal. But Warren Buffett, who spends a lot of his time coming up with the odds, the actuarials on what would happen in all kinds of unlikely insurance scenarios, he figures out exactly what he thinks the odds are. He said in this case, the odds are a little too difficult for him to even try and make an attempt at coming up with anything. So guys, again, very hard to know, particularly when it's basically two people who are going to have to make these decisions, the leaders of these two countries. I'll send it back to you.
Yeah. I actually had a question, Becky, about one of the investments in Berkshire and was wondering where you think Buffett is on Kraft Heinz. They had this funky accounting issue. The stock was at 90 in 2017. It's now trading in the low 30s. I mean, what does he do with this? And what does it mean for his relationship with 3G and everything else?
You know, I asked him that specifically this morning. He did talk a lot about it over the weekend at the shareholders meeting, where he said continually, time and time again, that they overpaid for Kraft. That's something they realized in hindsight. He does not think they overpaid for Heinz. I asked him this morning, what do you do with it now that you've realized that you've maybe overpaid for this? He said, well, you know, that's the tough situation. It's not the first time he's done that. It probably won't be the last. I also asked him if Kraft still has his support, given all of these announcements that have come out, including this announcement today about the investigation and what took place. And he said, yes, the company still does have his support.
Becky, just broadly, what was his overall take on equity levels? I heard the discussion based on sort of where interest rates were. We mentioned the trade war. Is what the Fed is doing and where rates are something that's more important to him?
Yeah, he and actually Gates and Munger agree with this. We've had this conversation. I told them it seems like for the same conversation maybe 4 or 5 years in a row, because they said the most important factor in trying to figure out whether the equity market is high or low is you have to compare it to interest rates. And right now, he said, if this relationship were to continue with interest rates so incredibly low, if that's the case, then Buffett thinks that the equity market is incredibly undervalued. But that's a very big if statement. If you want to try and figure out if that's going to continue, none of them think that this situation can continue for endlessly. However, they've been saying that for a few years, and none of them really know when or what will change that relationship, what will make interest rates go higher.
All right, Becky, thank you. Good stuff as always.
Thanks,
Becky
guys.
Quick in Omaha. Under 40 minutes to go here before the close. Dow's down 65. So session highs are down in the 40s at this point, but session lows we're down a lot more than that, down about 471 points earlier today. So a pretty nice recovery. The Russell 2000 Index small caps actually turning positive on the session.
I love it.
Up next, we'll head to the floor with the top trader to see which stocks have been driving today's big comeback.
And President Trump's trade tweet about China sent the markets into tailspin, but with this afternoon's comeback, we'll take a look at some buying opportunities that occur in the middle of tough trade talk. We're back in a couple.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Welcome back. We've got about half an hour left to trade, and we are only down 0.2% on the down, near session highs. Let's get a trader's take. Steve Grasso from Stuart Frankel joins me. Steve, great to see you.
Good to see you.
So clearly trade is the topic of the day. What stands out for you underlining that?
This morning when you came in, everyone was sort of shooting first, asking questions later. You see one of those inflammatory headlines, and everyone wants to run for the door. The market has an incredible run. People who have been thinking the market's due for a pullback was looking for this to be the pullback. They were pleasantly surprised when you see the market kind of turn on its heels. What turned it? China Tech. These big names that were sold first. They're the poster child for trade. If those names, let's talk about Alibaba. If Alibaba, which is up 36% year to date, if that one can turn by the tune of $4 intraday, it gave the market sort of a signal as to the pulse of what trade is going forward, which is
That's
a lot more positive than the headlines would have been.
That is a lie.
So as the
That is a lie.
today, what should be people who are still looking to buy the dips be looking at? Because
that was pump protection team and Fed money against pumped into the market. The same thing the BlackRock guy just sat there and said.
Oil with the Chevron deal, that's sort of supportive in the market. But
and they're going to try to pump the market into the closing because they want that momentum to carry into the futures market.
Energy has done nothing. So you don't want to chase the laggards. You want to be buying tech. You want to be buying that group because that group got us here to all-time
crap over here.
So you don't want to chase financials. You don't want to chase
energy. All the crap
you do
over
want to
here.
be buying tech, and you have to be optimistic on tech.
And get you caught up in word salad.
What
do you call
Small
word
caps,
salad?
that's the obvious bet on a day like today. They have less of exposure to international, less of exposure to macro global headlines than you do see with the small cap names. Those are the names that turn first.
Okay, Stephen, great to see you as always. Sarah, I'll send it back to you. 33 minutes left to trade, and we're only down 45 points on the down.
It really isn't only. All right, up next, we're going to take a look at how much of an impact these China trade headlines have been having with retail investors. TD Ameritrade's JJ Kinahan is with us. Plus, Shark Tank's Damon John joins us to talk about some of the challenges of doing business in China. That's all coming up as we had to break a check on the losers in the NASDAQ 100. We're going to dive deeper into what's driving these moves when we come back.
And JD got earnings, so that's why they lagging. They got earnings coming up. And these people are very criminal. Very criminal. I mean, it's weird too because when the Fed dropped that news piece that pretty much told everybody that the valuations are elevated into at high risk of debt, that tells you that all these Wall Street analysts and people that's on CNBC all day just pumping the market nonstop, they're going to get a lot of people hurt. The Fed is pretty much telling you this market is so saturated in fluff and froth that it ain't even ain't even funny anymore. And they've elevated. It's kind of like if you guys have been in the military and know anything about military, when they have they kind of give the I would say the threat warning of the day. They have different colors, banners that they use, a different kind of reasons that they use. This elevated high risk banner that the Feds put out, that's kind of like a red banner. Like, we in trouble. Like, pay attention to what's going on around you. And then you still got people coming on here, oh no, right now is still good area to buy. And then like, stop. So they make money on you losing money. That's the hustle. They need you to think, emotional and just dump your liquid into the market in ways where it's at nosebleed session because you're not looking at the indicators, you're not looking at oscillators, you're not looking at trends, pattern, 52-week charts. You just say, oh, I'm gonna follow everybody else, but everybody else doing it. And that's how they burn you. All right, that's how they burn you. Always be cautious. Always be cautious.
Welcome back to the closing bell. We are experiencing a major reversal in stocks intraday. As you can see, the Dow down just 0.25% in points, down 62. That's very close to the high of the session, down 46. The low was down nearly 500. That explains the scale of their comeback intraday. Two sectors now even in positive territory, but materials still down more than 1% at the bottom.
Energy and healthcare, doing the best of the group. Time now for CNBC News Update with Sue Herrera. Hi, Sue.
Hello, Sarah. Hello, everyone. Here's what's happening at this hour. Authorities continue the search for a missing person following a devastating plant explosion. The blast occurred Friday at the AB Specialty Silicones plant in Waukegan, Illinois. Investigators have not yet determined the cause of that accident. Turkey's highest electoral board has decided that the recent Istanbul mayoral election has to be rerun on June 23rd. The ruling comes after the party of Turkish President Erdogan challenged the legitimacy of that vote, which saw a narrow win for the opposition candidate. A new study from the Food and Drug Administration shedding some light on how much of the active ingredients in sunscreen are absorbed into our skin. Researchers found 4 active ingredients in blood samples at levels higher than the amount considered safe enough to avoid further tests. And President Donald Trump says he is looking into offering a waiver that would allow Service Academy athletes to play professional sports immediately upon graduation. Mr. Trump made the announcement while presenting the Commander-in-Chief's trophy to the U.S. Military Academy football team during a Rose Garden ceremony. You're up to date. That's the news update, guys. I'll see you in an hour. Back to you.
Okay, Sue, great stuff. Thank you very much. Joining us now to talk about today's market rebound is JJ Kinahan, TD Ameritrade Chief Market Strategist. JJ, good afternoon to you. Thanks for joining us.
Always happy to be here.
So before we get on the review of what your clients were doing in the past month, let's talk about today and intraday turnaround. Do your clients tend to get concerned about negative trade headlines, and are you surprised to see them cast it aside today?
Well, I think everyone gets concerned, but I also think you have to take something like this, and I think many people did, with a grain of salt when it first hits. If you look at what the president's done in the past, he often comes out with a grandiose statement and then follows it up with something a little bit more practical. But the other part about it is, you know, you only have the futures really on Sunday night and the overnight ETFs. So it's a limited world that you can trade. So because of that, everyone is kind of rushing to the same place. Often the pendulum will swing on news immediately. I think that's what happened once people were able to say, okay, some of these individual stocks still look like nice bargains or whatever it may be based on that movement. I believe that's one of the reasons you saw us gain the momentum in the morning. I will say I am a little surprised with how well we are coming in. To see the Russell positive on the day right now is really impressive, actually. Some of it may be because of the China fears as people go to the more domestic companies that are contained within the Russell.
How much of the sentiment shift that you detected and that we saw in the price action in the beginning of the year was built on the fact that it was looking more likely that we were going to get a trade deal with China?
Well, especially the last couple of weeks, right? Everything we saw was positive. And
we get one as soon as this week.
Yeah, and then you have this news, and I think that's the thing that, you know, it took everybody by surprise. But, you know, Sarah, you guys are nice enough to have me here every month, and we talk about the fact that even though we've rallied a lot this year, our clients have been a little bit tepid about their reaction compared to a year and a half ago when we rallied, and they were much more of a I'm all in type situation. So I think that's been the biggest difference, is this overhang, without it being settled, has certainly made most investors very cautious.
And in terms of the underlying stocks, one that you point out to us, Boeing, how are they trading that with all the headlines?
Well, it's so interesting. If I look back at April in Boeing, when this stock gets under like the 376, 377 level, our clients are coming in to buy it. And so, you know, it's a little bit lower than that. It's got as low as 355 at the end of the. They've been buyers of Boeing almost every week for the last 4 or 5 weeks, because people still believe in the long-term story of what's happening there. You know, it's funny if you talk about how our country needs infrastructure.
They're going to be in for a rude awakening. If they actually do what's right by law,
you know, our world,
they're going to be in for a rude awakening, but they're not going to do it because, again, Boeing is like Enron without them getting charged, though. They refuse to charge them.
Okay, JJ, we're out of time.
Because it's criminal what Boeing has been able to pull off with knowing that they knew about that, you know, safety issue not being presented to people that bought their planes.
0.2% now on the Dow. A growing number of companies have been citing trade concerns on their earnings calls. We've got the details on that coming up.
Plus, we will talk to the Credit Suisse chief U.S. equity strategist about the sectors he would buy in these final minutes of today's big market bounce. Welcome back to the closing bell. Here are the losers in the Dow, even as the blue chip index has made a big comeback today. Some China exposed names, Nike and Apple, namely at the bottom of the list. Industrials also get that global exposure. Caterpillar, 3M, Boeing, not doing too hot. I will note, though, that the Dow is only down 35 points. That is actually the session high. At one point, we were as low as 471. Futures hammered even harder than that last night. So it has been sort of a swift and steady recovery into the close. Will we go positive? We've got 22 minutes to find out.
We do. Russell's already there. The big three indices not quite yet. Now, concerns over trade and tariffs have been hitting earnings over the last couple of weeks. And Dom Chu is looking at what companies have said on their earnings calls on the topic. Hi, Dom.
So, Wilfred, Sarah, we scanned using FactSet all of the transcripts going all the way back to February 26th for S&P 500 earnings conference calls to see if there were specific mentions of certain keywords. Now, China was mentioned around 190 times so far. Now, China doesn't necessarily have to do with just trade or tariffs. It could be the issues with hogs and pigs out there right now, or any other combination of business aspects. But China mentioned 190 times. Tariffs specifically mentioned 77 times. And if you pair China and trade together, it was mentioned 25. It was not all negative. It spanned the range. Check out this, for instance. One company in particular, Intel, says we see customers on the more negative side becoming more cautious in their buying patterns, with the most acute deceleration happening in terms of one particular business in China. Demand pressure is particularly evident in our data center business. That's one to watch. Another one that's perhaps more positive is check out what happened with Estee Lauder. While some of these risks materialized, particularly the softness in the US and the UK markets, slower growth in China and travel retail did not happen. So they saw China actually doing okay. And then one other place to watch, most companies talking about the uncertainty around it. According to FedEx and their CFO, Alan Graff, if you could tell me, are we going to get a trade deal done with China? And is Brexit going to come out good? I could give you a better answer, but we are now preparing for both ways. They just don't know what's going to happen. So it could be good, it could be bad, it could be uncertain, but certainly the focus on China trade, tariffs, everything else, certainly focusing on what's happening with these earnings calls, guys. And that's just a sampling of what we found so far.
It seems like there's two big issues for U.S. companies as far as the risks in China when you get a headline like this. It's straight up tariffs, right? Those that are actually importing stuff that's manufactured in China or selling stuff to China, and the economic slowdown. I mean, the fact that the Chinese consumer and the Chinese economy gets hit harder, and that represents a big risk. So it's sort of a double whammy when it comes to U.S. exposure, Dom.
Yeah,
different companies,
well, and especially
different ways.
Exactly, and especially with regard to what you were saying, Sarah, and especially with regard to a beat that you know very well, and that's consumer products companies. Oftentimes, it'll be what resonates with the Chinese consumers there. If they are willing to spend more on goods, that could be a sign. For the most part, I mean, Estee Lauder was interesting only because they mentioned the fact that they thought they were going to see a slowdown in spending in China, but it didn't really happen that way. You look at some of these other consumer products companies as well. Certainly the Under Armour results with regard to strength in Asia Pacific, that's certainly something that's a little bit opposite of what you would expect given all the China-U.S. trade tensions so far, Sarah.
Dom, thank you very much for that. Sarah, I guess the other point to note, of course, is where are expectations on this topic relative to recently? And yes, Sunday night we get the tweets and it all sounds very bad, but snapshot compared to 2 months ago, and net, people will probably say we've improved the tone, we're getting closer, even despite the most recent setback. And furthermore, the economy's improved in both China and the US, regardless of where we are on trade. So again, it just allows a little bit of an offset, which I think has played into the recovery intraday in markets.
Sure, but you have to think, if you're a company, as far as planning, what do you do now if you don't know if the tariff rate is going to go up to 25? Retailers who are sort of making plans and then they put their plans on hold because it didn't look like it was going to get worse. They're the next group if Trump were to go further and escalate the tariff fight.
For sure, I think so, clearing all this up would definitely be a big weight off. It's just a question of whether they've got much worse than where we were 6 months ago. I think it's extending the uncertainty rather than necessarily drastically altering.
All right, 17 minutes to go before the close. Take a look at the Dow. We're near session highs. We're down 50 points. We were down about 40 just a few seconds ago. Up next, we're going to look at the sectors to buy in these final moments of trade.
And later, shares of AIG are up around 19% so far this year. It reports earnings along with Hertz after the close today. We'll preview that.
the MOS breakdown. Let's see where they are. Where are they in terms of calls and puts? It's only what 25 cents today. Let me see. Let a brother see what's going on. Hold up real quick here. Mosaic. They got earnings after hours too. Fertilizer business is in trouble for that region. In Nebraska and Omaha, what hurt their books this session. Let's see. Let me see what the options market look like. Yes, historical. Let's go February 1st. Only ones really major call 30,000 buy value, 26 calls. They already hit that. They should have closed out. Yeah, so expired on the 17th of this week. So they hit it at 25.57, 25.60. They had a lot of contracts though, so they probably didn't sell all of it. And it is sitting off the 52-week lows. GE definitely. Let's see.
Welcome back. 14 minutes to go in today's session. Here is where we stand. The Dow only down 72 points, so we've lost a bit of steam just in the last few moments or so. Losses sort of doubling, nowhere near the declines we saw earlier in the session, down 471 at the low. As far as the S&P 500, down a little less than 0.5%. So nothing extreme in terms of a sell-off. Only group, though, that is positive right now is healthcare, materials, and industrials and technology getting beat up the hardest.
Let's get a check-in on what's happening in the fixed income market. Rick Santelli joins us from CME in Chicago. Rick.
Hey, Wolf. You know, exactly the way you just framed the stock market, that it's losing a little bit of its steam as it
Hey, what's going on, guys? I just got a chance to see you guys in the back chat. I'm sitting there working. I just put on my little YouTube page. I can see.
Look at the intraday of 2 year. When the Dow was at its best levels just not long ago.
You know, they constant pumpers over there at CNBC anyway. Although I give Rick Santorum some kind of credit because he's the only one to try to provide some true clarity and balance. The rest of them just straight hawkish, bullish traders. Hey, what's going on, family? Q Doggy Dog. Good to see you, family. Power and profit to you. I got the Oba Jonathan in the house. I see you, big dog. My roommate from college just popped up. Good to see you, brother. I don't know if you just in or you still out. I just got a chance to come, forward and towards the YouTube to see what you guys doing in the back chat. My bad. I had the screen share going, obviously. Hey, what's going on, family? CG3, good to see you in the house. Family, power and profit to you. Salute to you, King. Right? Stock market should fade into the close. Yeah, it's probably going, they hit the big resistance there now, that 293. That 293 handle seemed to be a little bit problematic. And that's only because, I mean, most of the quants or algos pretty much just kind of hit a point where they didn't have any natural, I would say natural news catalyst left to kind of take the rest of that distance through there to really push through that resistance to get up there. They got the 293.20 something, but they're gonna do like they always do. Gonna let the RSI kind of come back down, let the the market kind of cool back down a little bit. Then they're gonna push it up after hours. Again, it's everything we've been watching and seeing over the past 2 or 3 months. right? All that is an RSI reset, some profit taking, and then the next wave, algos will come in and buy that last little 5-10 minutes up, and then they'll carry it over into the aftermarket. All the money that's been made in the stock market over the past 8 to 9 months, to be exact, but I would say about the last 10 months, all the money that's been made has been made during the futures market. Do not be fooled. That's how they found a way to get around the retail traders. So they'll buy up exorbitant rates during the futures market or dump in the futures market, and then come back in and buy it up during the retail market. So that's why you never get a chance to get any kind of real big follow through during the retail hours of the day, because they've already manipulated the market enough to the point where it's thinned out in terms of natural big sellers that would be a hedge or a big bank, whatever. So they use the futures market because it's somewhat, it's on record, but it's off record in a way where it's not really quantified through the intraday statistic in terms of who's really selling off into the market. Because then the futures contracts are totally different than buying regular intraday puts and calls. And so again, they hustling retail traders. Now everybody that woke up this morning had in mind that they was going to buy a lot of puts to short the market. I mean, who wouldn't woke up and saw what thing? Market down 500. Now, although you still want to hedge that too, because again, that bottom looks attractive. You can bottom bounce buy and take advantage of the uptick, right? But no one saw that you was going to get a 400 point, rebound or reverse off the lows. That's just unheard of. I mean, the same thing that happened back in December when they had the big market, kind of flash dump back then. Then they bought the market up literally in the last 30 minutes. The market over 1,100 points. Now, where in the heck all that money came from? So again, the feds are just printing money because they are also still trying to appease Trump. Trust me, guys, these people are A1 type criminals. But again, you can't comment on it because again, people are gonna feel some kind of way about it, right? Like everything that they're telling you, the value of the market's overheating. They're at high elevated risk factor right now, and people are still ignoring that because and they still had the nerve last week to still have a very greedy mentality and say that the market needs to have rates cut, and everything is at all-time highs, overstimulated, over frothy valuations on these companies that they need worth a third of what their valuations are, and these people still telling you that they want them the Fed to cut rates so they can try to run this trash up higher, as if they ain't already had a 11-year run at making a lot of money, and to the point where they don't understand the natural flow. Well, they do, but they don't care how markets need to pull back a little bit, reset, lower all the lower, pretty much hit the reset button on some of these RSI oscillators, MACDs, and all this. And then again, new buyers come in, rinse out that old money, park it some, and then go back up. What they doing, they just letting it pull back like a half inch, and then they just buying it and tilt constantly off fake fiat currency money. It's funny how this stuff happens, but once you've seen it enough and studied it, you kind of see what's happening before it happens. And that's just a part of just being familiar with, ebb and flows of the market and understand the fundamental analysis to a degree where you can say, well, there's no way if the Feds are still sitting at a, near 2.5%, a little more than that, 3%, and they're trying to get the book value down to like 2%. Why in the hell y'all still printing out this free money to pump into the market because y'all scared to raise the interest rate to bring this market back down to an even level where they can kind of balance out the overall budget of the economy, right? Because see what the stat they don't put out there is the national debt. And where all that, where you keep having all these yield inversions that keep happening in the bond market that they refuse to keep talking about because they know most average retail traders don't study that kind of stuff or follow that kind of stuff because they're not more fundamentally sound. They are missing that. And anytime you have yield inversion, that's a major pause for equity markets. That shows that people are defaulting a lot faster on short-term debt than they even are on long-term debt. Or the inverse, excuse me, a lot of ways. So it's crazy how they have this kind of mentality where, again, this stuff is just never ending. But again, y'all know how this stuff goes. We know how to plug and play our way into this market, get our bag and get out the way of these people, because you can't show up to a gunfight, with a with a little $50 little cap gun, right, and a bag of marbles, right? that ain't gonna get it done. That ain't gonna get it done. You gonna get your head shot off somewhere. All right, so you got to be equipped, and learn how to use other tactics to help you, obviously walk away victorious. And sometimes sitting on the sideline and watching is a lot better than getting in the middle of a fight and you don't necessarily have the right weapons to kind of go at it and fight. So again, every move you make has to be very calculated, but done with a degree of risk that you realize that, even though the market is frothy, you can't bank on that being a catalyst to say I can still play this in a way where I got less risk aversion than those who are already at the top, or in essence even on the bottom bounce, because you're fighting algos and quants that are emotionless, and they're fueled by, again, fake money that the Federal Reserve can just go print a new batch of money that ain't even really accounted for and inflate the markets with it, what they call hyperinflation, or stimulate the markets with it. Like, who's the overcount, the overseer for that kind of account value? You don't get to see that. And again, it's easy for people to skew numbers. That's what China and America have been doing over the past literally 12 months. They've been skewing data all day long to make one look better than the other. And even though that's not the truth in terms of what the real data may say, people do that all the time in these Fortune 500 companies. They skew the data and cook the books all day long. I mean, some of you guys work in corporate America, we all seen your own company cook their books, falsifying fraudulent numbers to make it seem like they did something that they didn't. I mean, you're not dealing with ethics and morals here. You're dealing with greed, money, and that kind of reality. There's no ethics in that. But that's why I love being, in this industry, because you get a chance to play it from a position where you can capitalize even their small little, or off their greediness, or the lack thereof in some cases, where people are just kind of very complacent and thinking that it's going to do something, one way. You could just be obviously thinking about the other way. And that's why it's important to hedge properly, know what you're doing. Again, as I'm always saying, what, why, when, and where, right? If you can't answer three of those questions, don't take that trade. You don't have no point to prove nobody, or stay within a very, very, tight risk versus reward value of good risk management, excuse me, because that shows you have a little bit more composure and you're not overly exposed, right? You don't dump, again, a $250,000 account into a probability trade that's already at a high risk aversion value on this chart value and everything else, even this valuation. Right? There's much better stocks out there you can trade than just trying to prove that stock to be something that's worthy of your capital, right? So again, that's why I'm always, a big proponent of saying, hey, take your time, don't force it. The market will provide something for you that you can benefit from, because there's so much money being made every day, hand over fist, no matter, how you look at it. Our goal is to find that one snare stock out there, that one diamond in the rough that gives us, a comfortable trade, and that's what it's all about in a lot of ways. All right. So just, make sure we kind of keep that in mind. But yeah, so power and profit to the family. Good to see you guys as always. Strength, the whole nine. Again, I didn't rally back a little bit. I was up as much as like about, I think $1,200. Then they took me all the way down to like 400 on my fade trades. I had, some stop loss base set to make sure I at least close with at least 400. But since then, I've rallied back like 400. So I'm up roughly about $850. And that's because, again, that's nonstop them manipulating and pumping the market. They just ruined a lot of those good positions that I had, in essence, where it's supposed to have that continuation, or what we call the follow through. But again, you can't fight with big money unless you got big money, right? And so that's just the name of the game. Right? It's either get down and lay down with the little movie, Get Rich or Die Trying. You better hit that buy button and hit that sell button. That's about it. But again, yeah. So I rallied back a little bit here, as you can see, up $845. There's a couple of them that I'm gonna swing. I'm thinking ready to close out a couple of them, or at least reduce some of them, because again, you can't trust these folk, man. You can't trust them. I mean, that's still a good day by any stretch of the imagination. In value, because again, but granted the fact that I was up around about 1,200, actually the 13 to be exact, and then again got busy trying to set the live stream up, all that kind of stuff like that. Had a couple of them kind of reversed a little bit, had to readjust, go back, start, finish up the live stream, and so I kind of put a little bit back out there in a way where I shouldn't have gave it back. But either way, again, still a great day. Anytime you can walk away with more than you started with at the beginning of the day from any value of trading, by being able to kind of posture a theoretical value of proposition, or a proponent of knowing that you put yourself in a good position, then that's always a win-win, right? So I just want to say that. So yeah, so let me get ready to do this real quick. Only got like a few seconds left here. All right, so let me definitely reduce. Hold up, did I take all the way that out? Let's do 30 in that. All right, good.
We did have energy and oil companies positive as well, but as you can see, they're flat as we approach the close. Only materials though down more than 1%. Earlier in the session we had 6.
God, dog, I didn't make it in time. God, I was just trying to short that stinking stock. That's all right. That's all right. That's all right. It's all good. It's all good. Yeah, I got a little ahead of myself again. See, I let you know. I got a little too comfortable about my element today. I had a couple little trades I was going to take. Well, one particular in the earnings, and I didn't make the bell in time, but that's fine. That is fine. You know, because again, a bird in the hand in the terms of the mentality of how we trade always beat one in the bush, and so we can deal with that. We can roll with that. We can roll with that. All right. So, as far as earnings tonight, we have a few, ain't a ton, but there's a few good ones out there worth perusing. Let me see. I can pull a couple of them up. Just have the screen going. Ain't no really big deal at this point because I messed around and didn't get a chance to. Right, GWPH. We got that one on deck. Hertz rental car, obviously. That's one worth watching, and also probably even Del Taco. Del Taco is a funny one too because it's even though they probably don't announce it on CNBC, they'll probably see that phenomenal. But again, the whole little taco industry, they trying to hold their little own out there. But also SEDG, that's probably one to watch as well, and maybe Health Insurance Innovation. But yeah, tonight definitely GWPH. GWH Pharmaceutical Company. That's a marijuana play company that dealing off the the biotech or the pharmaceutical side of the marijuana space. So that's one worth watching. So we'll pull that one up over the Apple chart. All right. All right. And then yeah, I think that's about it. The Del Taco probably just gonna do what it want to do anyway. They're gonna do what it want to do. And there we go with these after hour alerts already. So XENT alert after hours. $33 stock. They got news pending after hours. I don't know if they got earnings or just some news. So XENT. XENT earnings. Not earnings, excuse me, but they have news pending after hours here. So AIG, Hertz, let's see, what else I say? Oh, GWH Pharmaceutical. So let's pull up AIG. We'll just see what they're doing. Again, because these might be stuff that we can probably trade tomorrow, right? That may be, some great opportunity tomorrow for some extended, puts or call buys. You just never know. So we'll see what happens. So GWPH is already kind of moving up a little bit. I don't know if they already dropped their numbers or not. But either way, it's up and moving a little bit here after hours. In the after hours session, so to speak. All right, so we're good there. We're good there. So I locked in roughly about, well, actually, I forgot I locked in a little bit earlier, so I'm up a little bit more than that. I take that back. I was being a little, I guess, a little modest in my initial piece there. So yeah, so roughly about $300 and change, 360 something that I locked in. So again, roughly about 1,200 still. I guess I was saying that because I didn't lock all of it in. So I guess I kind of underestimated there. So roughly about 360 something locked in and another 900 kind of floating. But we'll see how that works, in terms of or excuse me, right about 800 something. All right, so let's see what this Boeing gonna do after hours. This is a small size, only 50 shares. That's why I do that crazy. I know how they love pumping Boeing. These people are again ruthless, man. They don't care. They will pump the brakes off of market and pump you too, like who had the biggest pump fake in the basketball? They'll pump fake you to death. You don't know how to stay Remind me of that little skit on Facebook where the guy was doing a lot of the pump faking. Let me see if I can find that real quick. Let me just have a little fun with the family since we, hanging out a little bit here. Let me see if I can find that thing. That thing, no, it tickled me, man. I was like, hey, people are crazy. They're a hot mess. Dude, pump fake the brakes off a jugger playing some air basketball. What? Say what? Let me see if I can find that clip. Again, power prop to everybody on this great afternoon, man. Good to see you guys. Happy to have the family in the house. I know you guys are busy out there conquering the world, and you could be anywhere in the world, but your hand out with your brother here. If it's just for a second or two, I appreciate that more. You can even imagine. As y'all know, I am a very humble brother by that perspective. So I look forward to having more live stream sessions coming up here in the near future. Again, that's my goal, to kind of ramp it up a little bit better. Really just, again, provide some content, for everybody. So definitely appreciate you guys. Again, as always, being able to kind of hang out with me, and sharing in the wealth of the knowledge, and also just, the natural ebb and flow, watch the market, do its thing day over day. Again, but what I am excited about is the promotion with this challenge, right? I can't speak about that enough. So I'm gonna talk about that again a little bit here in a little while. I spoke about it earlier at the beginning of the live stream. But that's gonna be the conversation piece that I'm gonna talk about over the next 10 days during the sign up process. So that way, everybody will be solid in knowing, pretty much all the ins and outs about it. So, you'll be clear on, what to look out for and what to pay attention to, this, that, and third, right? So no worries. So 1 second here. Let me pull up hold up. Where is this at? I need this. And I need to share my screen. Yeah. All right, there we go. This junk here, that's crazy, man. There's some crazy people out there, bro. There's some crazy folk out there. Baby's on it.
Oh my God!
Run! You scared me. The old school for the swing on it. Old school about to swing on it. Listen to that footwork.
Scared me. I didn't see you.
That dude is crazy.
Oh God, I'm so sorry. Oh my God.
Wow. Wow. That's crazy. Listen to that footwork.
What the heck are you doing?
James Hard. Jay Hard.
Seriously?
James Harden.
Do we have an issue?
Look at that little purse. Look at that footwork. That footwork.
The stutter step back on him real quick.
You know I can take you off of that.
You kick me out of that.
Yeah.
Kick me out there, motherfucker. Scared the shit out of me. James Harden.
Listen to him.
Yo, sweat coin. They pay me for steps. Taking steps all day. Licking the bio, sweat coin. Get paid to walk. Get paid to walk.
That's crazy, guys. That was crazy. Wow. But I tell you, man, sometimes you gotta laugh, cut up a little bit. Yeah, that was crazy. That was crazy. Unbelievable. All right. So yeah. Better put them foots on him. Yeah, so GWPH obviously up after hours, as you guys can see. Obviously, they must have beat on their earnings. They're up, oh man, roughly about $13 here after hours here. So great push on GWPH in the earnings thus far at this, pretty much juncture of them releasing their numbers. All right, so again, earnings beat on GWPH as of now, it looks like it. I haven't seen the numbers or read any of the reports, but looks like, okay, there we go. Got a pop on HTZ. Hertz is up and moving right now. We have HTZ up and moving right now. So either they beat on earnings or they're still, unleashing the numbers. Who knows? We'll see in a couple of minutes here. The stock kind of, catapults above that $21 handle, which will be a clear indication that there's some movement, significant movement, and not just kind of, market makers trying to adjust the price and all that kind of stuff. All right. All right. Let's see what GWPH here does. It got a little pullback here. If it's going to fail miserably and come back down, or it's going to, bounce at a level, a significant level of support and go back up. I mean, it's $10. It's already up 13. So, yeah, we'll see what happens here. All right. So let's see here. Let's see here. Okay, I got a message here. Okay, yeah, so 12:30. All right. What's Karen? Oh, Karen. Oh, man, I'm about to say, who is that? All right. All right, they're going Hertz. Hertz looking to get ready to come back. Hertz getting ready to kind of pull back a little bit here. Let's see if it holds here. Get a bounce here. Get excited. All right, so tomorrow's gonna be very interesting. Again, watching the the SPY here in the after hour session, somewhat kind of roll back underneath the 20 EMA on the 5 minute. Again, we'll see if that lasts or not, because again, we know that these people are very carnivorous right now. And even though you see all this sell volume here on the back end of the day here, it's not indicative of how they melted the market up the entire day. Look at this here. Look when the market was thin in volume, you still had this constant melt up of this. The market makers kept raising the price up. Again, the price to bears out of the market to the point where they couldn't find a solid entry in terms by reading the level 2 in the ask. So they did this methodically, like some out of a mosaic, painting. This is just unbelievable how they melted the market up all day off this bounce. Since when the market opened at 9:30 to up to this point here when it got hit that resistance around 293.20, somewhere around there. It just unbelievable how it just makes no sense. Like how it just it's like you can't even make this stuff up. Like the market goes up dang near 400 points on basically nothing but algos buying the market up with a little retail sprinkling in there. But we know those algos were big banks and hedge funds sprinkling in there with the Fed money pumping the market too. So again, this is you can't even put it into context. It's just sometimes you got like, man, they can forget this mess. You can't fight these criminals because they're gonna find a way to justify it too. That's what's crazy about it. They will always find a way to justify, even though everybody else is saying overheated, overinflated, overvaluated, market just in the nosebleed section, trash PE ratios, still 30 times on it, 25 times earned, and these people still say, oh, there's more room for it to go higher. I mean, again, you couldn't make this stuff up, guys. You can't make this stuff up. But again, That's the game. That's the name of the game. You know, the name of the game is be on the right side of the trade no matter what, because that's why the market is not an exact science, right? It's not an exact science, right? And it's always right, regardless, even when it shows you signs that is highly flawed and wrong. You can't compete, you know, against the value of knowing that the market still has to play its position in terms of who got the biggest dollars, right? Who has the biggest bank, you know, to bankroll the movement, right? Again, that's why the float is set in terms of who can control it, you know, from an intraday perspective, right? And whoever controls that float wins the battle, right? That's the name of the game. That's the name of the game. They say don't hate the game, man. Don't hate the player, hate the game. They say. Yeah, again, very interesting nonetheless. Again, very interesting nonetheless. Knowing when and how and all that kind of stuff. Right. So again, we got a little movement here. Finally, again, we got Hertz starting to rebound here. And again, if it clears that $21 handle, then you can really begin to, you know, see that we have some nice little support on Hertz if you can get above that, you know, that $21 handle. Right now, it's struggling to, you know, to stay, you know, a little bit above that, but actually to get above 2050 to be exact. So it keeps pinging up there near it and kind of pulling back. So we had some movement on AIG as well. AIG is starting to pull back here on this earning, but we'll see. I think the numbers just started to come out. So when the numbers get digested, we'll see what happens from there. AIG has to clear $49 to show a major level of good support from its earnings beat to keep it out of the danger of being sold off in here in the after hour session. So we're looking for $49 on AIG to show some strength and support. $21 on Hertz to show a significant sign. I'll even give it as low as 2050 on Hertz and see if they could do. Outside of that, GWPH is still doing pretty good above, you know, above the 185 handle. But we'll see what comes from that. Again, just watching the market here in the after hour session here. All right, so that's what we're looking like so far here at this moment, you know, moment in time here. All right, guys. So. Very interesting day. Again, interesting turn of events since yesterday's futures market, where it was down like 500 points, and these people literally bought that market all the way back on just straight monopoly money, sprinkling in with some real retail money like our money, but everything else, the big money was just all just yeah. Like, dude, y'all was already thinned out. Y'all didn't have that much dry powder sitting on the sideline, or all just kind of free cash sitting on the sideline to pump to the market. Even if you use margin accounts, it would be stupid just to be buying in at that session, those session highs, with the potential that you think you just going to obviously go at the extent and go higher. Again, it's not rational. It's no matter how you try to position, it's not rational. But you know, anything is possible, I guess, when you deal with a scenario that shows you it's going to do what it's going to do regardless. And basically, that's what they did. They did what they wanted to do. They did what they wanted to do. And the end result is what you get and what you see in terms of the market. In terms of the market. All right, so AIG starting to move a little bit there again. So see what comes from that. Excuse me. Let's see what's happening over here on the scanner real quick too, just in case on the after hours. All right, so SDG, I spoke about that one earlier. Obviously, it seemed like they beat their earnings. SEDG. They're up by 16% here after hour. Big move on their part. I mean, that's a big move here after hours. I was actually eyeing this stock. That was the stock I was actually trying to trade. I ran out of time. I was trying to get a little trade in real quick. That in MOS, the Mosaic Fertilizing Company, I couldn't get in. You know, kind of let time get behind me a little bit, and I missed out on that opportunity. But either way, it's all good. Again, you know, you get some, and some of them you just can't get. So it's all well. It's all well. All right, so no worries in that perspective. All right, no worries in that perspective. Still did good on the day. Still able to get some things accomplished, and the rest is history. All right, so we got Sharp pulling back a little bit after hours. We got Ford Motor Company. I was just teetering on the back and forth session of the after hour losers, so to speak here. HIIQ scan spoke about that when it's down here after hours. It had earnings tonight. GLUU, it had earnings tonight, so it's down about 4%. So obviously there's some movement going on with those companies. Cron, the marijuana company, Cron, they're down 0.9%, ain't that major there. But these are your after hour losers here. These are your after hour winners here. Right. So anything significant above 2% in some cases is worth kind of looking at this point. Everything else is just kind of whatever. Nothing really serious at this point. All right, guys. So that's where we're at here in the after hour session. Now we got some movement on AIG. Okay, there we go. Clearing that $49 handle like we spoke about earlier. Now that could be a major level of support here going forward if if the market don't reverse here, especially when the conference call kicks off. So that's a major good level to build a support at 49 in the event that the stock obviously picks up some some new buyers here. All right. Whole little Hertz can't seem to get right over here. That might be the can't get right of the after hour session. Hertz. It's stuck here trying to even clear this 2050. I was trying to say 21, but that's why I said I had to lower my bar to 2050. It's like it's struggling, between 2050 and $20. So that one they're looking very suspect, And again, that's still a good little jump for a stock trader. It's priced from basically roughly around about 1970, 1960 area, up above 20, 30. I mean, it's still 80 cents, but again, that's not that significant in the way that this market is still kind of very ambiguously weak in the essence of it being up too high where they're not necessarily going to pay a worthy price for something that's not necessarily a big mover. And Hertz is not a big mover, so they'd rather just sell it off and move on to something that's worth their dollars. But again, who knows? Who knows, right? All right, guys. So yeah, so I got a little bit of pets still going. I feel like it's still more downside to that. It's on a small side, 8,000 position. And again, that Boeing position, I want them to prove me wrong in that, because if it closes above that 376, I'll eat that little $5 loss value from little 50 shares, and I'll lose 300 if it's worth it, because I think that stock. I know it should be trading at around 350, especially after the news that came out over the weekend. But again, we know that these people can care less. They reward criminality and they punish people who try to do decent value things in the market because it's not attracted to what they want in terms of PE ratios and market valuation. So again, you're just dealing with people who have a very skewed bias in terms of markets. Again, it's all about who have the bigger money, the bigger bank. All right, so that's that. That is that. All right, so hold on. Oh, I wasn't even. Well, dang, my screen wasn't even sharing, huh? God, dog it. Or was it? I don't know. Okay, so yeah, I can see now. So yeah. It felt like I was kind of convenient that Chester Cheetah asked about rate reduction in the Fed chair. Yeah, man, come on, you dealing with again, you're dealing with the idea that he couldn't get his way, he couldn't get the rate cut because he knew he wouldn't. And it made perfect sense. Somebody actually spoke on that today. The fact that he couldn't get that rate cut that they really wanted, everybody was thinking that he was going to bully the Fed into cutting rates, which would have made the market even more frothy because that would have given them the green light to pump a lot of more liquidity into the market, meaning this fake money, fiat money that they pull out of thin air. And the Feds didn't do it. It's like, people know better, even though they kind of in cahoots with them too. But they still have to somewhat provide the kind of mentality that they're still trying to, protect the so-called American people, the average, person that's out there that's working hard, that's not even market, market related. A lot of people don't trade the stock market. They have no clue. They may have 401ks, Roth, and all that stuff, but they don't understand daily ebb and flow. So they ain't really benefiting. you know, off all this stuff that they sit there and talk about every day when it comes to the quantum tightening. It actually hurts them when they actually, you know, are taking away a lot of the kind of opportunities in terms of the overall back end benefits, but not the monetary value that's being produced through the markets. And so that's why I'm always saying this is why we have to get invested into the markets, because all the extra money that was like literally the market bounced over 400 points today. Now, again, I didn't trade it in a very aggressive way. I just had my trade set because I was busy doing other stuff. But if I was trading today like in a way where when I'm like super like, you know, keen to the market on my game, again, I would have bought some of those dips up too and rolled them up and shorted some of the other weaker ones, right? The laggers, and bought the, you know, the outperformers up and rolled that up too and made a lot of money too, right? So again, all this liquid capital is being, liquid profit is being produced off a lot of just hype, you know, and bedazzle and arousal kind of reality of talks about this. It's just rhetoric pretty much that's you know, swelling up the market. It's a lot of rhetoric that swells the market up. You know, I could have easily bought that too, right? But you best believe someone made a ton of money today. A lot of people made a ton of money today buying these dips up. Now, will it hold for tomorrow and all that? That's to be determined. But again, if you didn't take a good part of your profit off the table today, even if you still feel good about the market rebounding, then again, that doesn't, you know, says that you're disciplined. Right? Even I took a little bit, you know, off my little Tesla trade, right? Took a little profit in that, even though I had some of my swings that I'm just going to keep, you know, for my own value of my technical and fundamental analysis. But I locked in a little bit, right? So we locked in roughly about $300 around there, somewhere around $300 $400. I have to go back and look. But either way, it's the ideal that, again, you're just trying to, you know, jock for position. And the market is about, you know, proper positioning in a lot of ways. Yeah, it really is. So entry is everything, exit as well. And so we'll see what happens here overnight. Again, we know that this is a week that's going to be make it or break it. It's a do or die week for Trump. That's why I love this, that since he did what he did Sunday, it really gave all of us the opportunity to kind of start planning for what's to come. So this is the do or die week for Trump, right? He tried every trick bag thing he had in his trick bag to kind of, manipulate the market much as he can, because he wants to be the president known as, you know, the market man or the tariff man or whatever you want to be called. I don't know what's going on that man's head, but yeah, he's definitely doing away with all of this little, you know, leverage, you know, pieces that he has left to offer, because now it's either he has to come away with a deal or the market is going to sell off so hard. Right? Yesterday, you know, futures market was just a test of what it really could be. There's some definitive news out there. And so they'll do stuff like that just to test the sentiment of the market. Then they'll come back and kind of throw people an olive branch to say, well, hey, you know, well, maybe we might just, you know, salvage this thing after all. And see, after people that then sold their position that was in at much lower prices because they think the market's going to fall out, they just cheated you out your average in your position. And so that's the part of the market that just, again, it's just like, man, you can't trust these buzzers. They buzzers. Like all of them are just buzzers. And so it makes it very problematic if you're trying to really somewhat, quote unquote, play by the rules, right? But you got obviously people who can care less about the rule because they make the rules and break them as they see fit. So again, there's no easy way to do nothing. Again, it'd be the same if you working on the job, someone sabotages you, this, that, and the third. The boss is cutting back on y'all. You're not going to get away from this stuff unless you just really run your own operation. And so, but the one thing I can say that I love about the market, though, being that we have that kind of, freedom to move how we want to, you know, we don't have to sit here and languish in this stuff all day if we don't choose. We can just say, well, I'm moving with the liquidity of the market, wherever that may be. It'd be the first 30 minutes of the trading session or the last 20, 30 minutes of session. Then you make the majority of your money right then and there, and you're done. You don't have to worry about all the in-between drama, any of that other kind of stuff. And so it gives you opportunities to be successful without having to sit there and like you ride the clock all day. And that's the part of the market that, you know, you got to love that freedom that you have, you know, to be able to do that. And that's what makes it exciting. So, you know, just kind of putting that into context. And that's why we train. That's why we study. That's why we look at the market from all angles, not just one side. We look at it from all angles. Momentum trading, again, you know, swing trading, pattern and trend trading, again, certain indicator value type trading, you know, buy signal, sell signal, supply and demand, you name it, Bollinger Band scenario, breakouts, wedges, you know, the whole nine, even down to the candles, right? Confirmation signals and all that kind of stuff. So again, in that moment, if you leverage properly, you'll always walk away with some kind of form of profit value. If you know, again, more than average, I should say, than the value of the few losses that you may have. You know, so we'll see what happens from there. Yeah, right. Like you said, Obregon, yeah. So he likes the fact that Mueller found no collusion again, and that ain't even been determined to be conclusive. They found data of market, the manipulation in terms of not collusion but obstruction. They found adequate means of obstruction of him being obstructing the vast investigation. So that's basically showed that there's a criminal aspect of that, but they see that as such a in their mind a petty value to kind of come at him for any kind of form of inherent impeachment. Then if they could have really got him jammed up with being in bed with these Russian operatives, right? But we know what we do know without doubt is the fact that his cabinetry or some of his closest people were actually doing that though. And so it's automatically, he's giving some directives for them guys to be doing that. They ain't just doing that on GP. So people ain't stupid, and so they're gonna play on the American public mind and say, well, there's no outright collusion because they can't put his actual, fingerprints on the pen that signed this or the actual, phone call that was recorded. But all his cabinet around him were the ones that were doing that stuff. Even going down to Kushner, his little so-called pencil neck little son-in-law. Again, no disrespect to the guy, but I'm gonna call it like I said. They definitely got him on some stuff there, but they again because he had the whole issue about the security clearance. Like they just gave this guy security clearance, although the people at that time were saying, "Hey, we have concerns that he shouldn't deserve this level of top secret security clearance because this is what we find out from a background check value." And Trump still pushed it through because it's the son-in-law thing because he hooked up with the daughter, the Ivanka Trump lady. So again, you always gonna have that kind of stuff, but either way, it does make for good conversation, understanding how geopolitics, how that works, especially in relation to the markets or just in general. But I mean, for us, this is our so-called drama, if you want to call it that, or this is our reality show. Right, but we learn a lot in these moments too, because again, our goal is to be well informed and not just be kind of trading blindly, which is still fine because you still follow a very tight regimen. Nothing wrong with that either. But far as me, I like to be very informed much as possible because again, you're dealing with I mean, what you're dealing with at the end of the day, at least to the point where you can feel like you're a little bit more empowered to make the proper decisions and not kind of just guess your way through this stuff. Right. So, but that's it. That's just pretty much how this stuff works. Again, that's just how the market works. And it makes for great fodder and conversation. All right. So that's it. So guys, again, definitely check the description box. Like I was saying earlier, we got the promotion going. Don't hesitate. Click the link, sign up for the competition, get yourself ready to rock and roll come May 28th. The opportunity to win this $250,000 trading account. Don't hesitate. Click the button, sign up, share this with your family, your friends, your co-workers, anybody that that will want to participate in such a wonderful, wonderful opportunity. Because at the end of the day, it don't cost you nothing. And that's all that matters at the end of the day, whether you feel some way, you don't feel some way, you like this, you don't like it, doesn't matter. If it's don't cost you nothing, click that button. All right, click that button. Right, and get locked into the opportunity, right? Because again, you may just be one of the ones that win a prize. Even if you don't win the top prize, you may come away with an intro account, or a student account, even probably even an expert account, right? We don't know, so it's going to be interesting how this going to unfold when it actually kicks off. So get excited for that. All right, yeah. What's going on? Let me see. Oh, did you ever trade futures? No, I don't trade futures. I'm pretty much set, and I probably will at some point. I'm not gonna say I won't, but most time when I set my positions, because the way that I trade, y'all pretty much know how I trade at this point, and a lot of that has been out of necessity because my time, has been really consumed doing other stuff. Unlike before, when I just had nothing to really focus on but just the market, I'll be trying to trade everything. You know, I'll be trading different assets. Different time frames of the market, I do a lot of dip buying in the after hours. That's what I was doing before, not through Tradenet, but through my other account. And I would just, front load for the next day. But futures, ever since, especially TD Ameritrade started doing round the clock futures trading, pretty much, it was like, okay, shucks, that's another opportunity I have if I choose to want to, use it. And I just haven't yet. So I'm comfortable just buying a stock that I feel like just give me a good dip buy opportunity to front load for the next day, right? If I'm watching the scan, I see something pop up, I'll be like, okay, yeah, this is probably gonna be in play tomorrow, right? So let's see how that turns out. And I just, kind of buy under that kind of, under that auspice. So, but yeah, so again, it's just about, whatever that's comfortable for what you like to trade. But that's where all the money been made, though. Over Gordon, to be exact, I said that about a few months ago. I was like, if you study the market, all the big money that's been made in the market has been happening during the futures market, either after hour sessions or pre-market sessions. And then retail come in, they make a little bit, but all the real big money been made in the futures market, after hour trading, and also pre-market. And that's how they've been hustling. That's how they've been hustling the market, because it's easy to manipulate the market doing after hours, pre-market, and also doing future session. Now they'll do it outright in your face during the regular intraday session too, but it's easier for them to, they kind of, flood money through through dark pools, just outright, notable market makers doing the future market, and hey, get away with it. People don't complain when they're making money. That's just fact. You don't complain that there might be some abnormal when you're making money. I've yet to see that happen. It kind of goes back, to some of the old saying that people ain't complaining about being with their partner and saying, well, I don't want to hang out because you got socks on. No, it's time to have fun. It's time to have fun. Right. So again, that's just the reality of things, and how, the market is kind of set up where, if you're on the right side of the trade, then you're going to get swept up into to the euphoria of the profit, and you're going to be set. You're going to be well taken care of. All right. People don't just, say, well, no, I don't want to, get this bag or get this money because it just don't seem right. No, it don't work that way. Well, not in the market, it doesn't, but, other stuff, yeah, you can have some ethics, some morals and ethics tied into what you do. I definitely try to move with a lot of integrity and dignity every day, because I know it matters, right? Dignity and integrity matters. But again, the market is not that. It's everything except that. But, in terms of interaction with others, you can definitely display that kind of stuff, though. All right. So ain't nothing wrong with that. But no, not yet over Gordon. We'll get into that, though. I'll actually, if you want to, kind of learn a little bit about the future market, I'll kind of, bring some family on, kind of that does trade it. And, maybe they can, give you some good pointers to what to look at. I mean, I'll look at the futures market. I'll sit there and kind of, mentally trade it. But I just, I don't really just, put my capital into it doing those late hours, because at that time I got other stuff going on, family, all that stuff. I'm like, if I did pretty well throughout the day and turned to make sure I got all my trades right and this, that, and the third, and helped others, then I'm fine with that. I'm pretty fine with that. Right. I went through that binge trading way back in the beginning, and back then it was more crypto. Altcoins, especially in 2017 when the market was on fire. Crypto, that was my binge trading. I'd be up, nonstop, 4 a.m. for the regular, equities market, and before that, crypto all night long. After having live sessions on sales show, and we'd go back into the Discord room and talk about trades, go over trade, go over chart, do live stream, live, breakdowns and analysis. And then we go right into trading crypto. Like Jokers just was not sleeping, but we had a powerful little team. And man, them guys, man, today they're doing big things. Some of them got other stuff going on, but I learned a lot in a very short period of time. Sharing ideas with others and feeding off each other. And people just feeding off each other. But that's what it takes. If you really want to take it to the next level, you have to be willing to put in that work. And when I say that, I mean it's just your study time, your cohesive time that you spend networking and think tanking with other people too, because that helps you break down data, in a way where it could be beneficial. All right, so we got to start moving after hours. So it's that XENT type trade that was halted on news pending, and it's gapping down. It is gapping down. So whatever the news was, that stock is gapping down, and and that's that. they dropped the ball on something, but it's gapping down here after hours, as you can see here, guys. It's XENT. It got halted early with news pending, so it dropped from 33 all the way down to 30. Right, so small little drop there. Well, major drop for a lot of people. That's $3 right here in the after hour session. Just XENT trade. Right, so what's that all about? I don't know, but it's gapping down on some news. So either it was earnings or it's something else. But right now it is on the way. It's very weak, I should say, after hours. It's very weak. All right. Let me see here. Just taking the message here. Oh, okay, yeah, it's a message. Okay, sorry about that. Reading a message. Yep, you're gapping down further here. After hours on XENT, now we're down to 29.50. Right, dropped from 33, some change. Now we're down to 29.50. So whatever the news is on that, obviously that asset, it definitely is pulling back here after hours. So definitely might be one worth watching tomorrow, just in case. We'll see. I look at everything as a possibility if it shows, a great potential opportunity. So, but that's why it's great to have a good scanner, right? Or just a way you can screen stocks in real time to get the most relevant data. And so, for me, again, I enjoy using Black Box. Again, it makes my little work a little bit more easier. I have other stuff I look at too, other stuff, scanners and screeners, but I enjoy being able to kind of get real time information when it happens, because the market is all about again, real time data. Less delays as possible. The more the faster is the quicker you can get to the bag, basically at the end of the day. All right, so that's always a plus. That's always a plus. And so as you can see here, these stocks had earnings after the hour. They're up nicely. You got 21% on STAG. That's the one I was going to play in the earnings. They didn't get filled fast. GWPH is up after hour, looking good. AIG is up after hours, up 6.4%. GWH 5.8%. All right, and there's a few others in here that had earnings tonight. FMC, they had earnings tonight. They're up 2.6%. The VIX is back up after hours a little bit, about 2.1% after hours. After the market had this unbelievable pump rally during the regular hours of the intraday, and they brought the market back. I was close to about 50-something points, being only down 50 points as opposed to 400 something. All right, so they showed the might of their money tonight, and they did it today, and they did it in a way where you knew without a shadow of a doubt that these people are pumping the market because they're trying to save face in the eyes of those who are watching from a global perspective how this tariff and trade war is starting to be a little bit more, it's just becoming a little bit more ludicrous at this point. And so anytime you have a sell-off, they're trying to present the might of their dollar by how much they can buy back the market up to prove that they can rebound faster than the next person. Right? It's all about who can, control the political weight of their economy in a lot of ways too, despite these tariffs and this, that, and the third. But hey, what do I know, right? Every person has their perspective. I have mine. So these are just obviously based upon my level of data research and then just what I observe from the markets from a geopolitical perspective. All right. All right. So we're down $28 here now on XENT. So right now we're down roughly about $5 here after hours on XENT. So whatever news they dropped got this thing selling off pretty ugly here after hours. So definitely going to be on watch tomorrow, either for a bounce or more downside, right? I'm pretty sure I'll pull up the news at some point and check it out. But XENT is the ticker symbol. XENT selling off here after hours after being halted on a T1 news halt, right? News pending. All right, so it's back on the grid right now, getting it in. All right, so yeah, so you guys, again, for you guys that hadn't had a chance to check out the promotion, the link is in the description box. The link is in the description box. Sign up, sign up, sign up. Don't hesitate. Get in early so you don't have to be sitting there trying to get in at the last moment. It costs you nothing, and you got everything to potentially win or gain. All right, so just go right on over there, click that little link where it says sign up, and get yourself ready to rock. To take, get after this $240,000, trading challenge. Right? Because if you win, I'm just gonna be the biggest, cheerleader of all times for you, because I just know, man, somebody gonna mess around and win this thing that I might even know. That's gonna just make my day. It's gonna make my day. All right, definitely. And if I have a chance to really trade it the way I want to, because I'll be busy at that time, and I win, y'all will know. Y'all will know if your brother wins. But the way it's looking like now, let something happen, man. Ooh, it's gonna be a stretch, because my time is gonna be like very thin at during that time span. I'll be, moving boxes around and doing all kind of stuff. Obviously moving too, because we actually move within that time frame. That's what's crazy, right? So yeah, that pretty much lets you know how my chances are. I'm gonna have to come out the gate getting at it every little day I get a chance to trade. I'm gonna have to just juice the brakes off of it. And again, it can be done. I mean, again, my biggest day intraday was like 33,000, so it could be done. And again, I already traded those kind of accounts anyway, so $250,000 accounts ain't nothing new that I'm not familiar with. But either way, for the competition, it's about who walk away with the biggest profit value at the end of the day. As long as they can stay within the rules. But it also depends on what the market looking like during that time frame too. Different stocks and where the market. So again, it's gonna be interesting. But I do look forward to it, and I'm pretty sure you guys do as well. Who's looking forward to the challenge? But share that link, like I said. Don't be stingy. Share that link with everybody you know, because it costs nothing. So co-workers, friends, families, whoever, share it with them so they can sign up too. And then if you have questions about needing to get for a manager contacting you, let me know and I'll help with that too. I will help with that as well. All right, guys. So I am getting ready to get up out of here. It's been a wonderful day, guys. I enjoyed it. Tomorrow, hopefully I get a chance to go live again tomorrow. Hopefully earlier than I did today. It depends, but I do have some business to take care of tomorrow. Actually, I have some clients coming through tomorrow for a showing of the property. I think around lunchtime, somewhere around there. But if I'm not live before then hopefully I'll be live after that. Unless some more people show up, kind of on the schedule last minute, then you'll know, because I try to be I'll probably be somewhere, right? Well, obviously, letting them kind of go through the place, but I'll be, out of pocket at the moment. All right, guys. So with that being said, again, power and profit strength to everyone. I hope you had a great day. Just kind of going over the remainder of the day here. I think, like I said, at this point, ain't nothing special. Kind of ended up, roughly a little down than where I started. I started out, pretty decent up around about 12, 13, closing out a little bit around, in terms of our bank around about 300-400, but I got 800 still out there floating. In terms of some of the swing trades that I think it's going to be, can provide some kind of paper on the back end of the day. And I'm pretty much, balanced pretty well in terms of my risk management. Unless something crazy happens, like someone try to buy Tesla out or buy Boeing out, both of those are posted, they can't get right to the market now. So unless something crazy happens, I've seen things happen crazy, but I should be securing those trades here out there. I'm not really worried about pets by no means. And so we'll see how tomorrow opens up. If I have some follow through with some of these trades. All right. And I'll be looking forward to trading other stocks tomorrow, maybe GWPH or AIG or Hertz and some of the other ones. That's why I enjoy earnings. All right. All right, guys. So that's that. So again, power and profit, everyone. I appreciate you guys as always, man. You guys are family. Y'all know you're welcome at any time, any day. Again, Sukasa, Mikasa, Sukasa, the whole nine. Hit me up in the Discord rooms if you got questions. Hit me up in the Facebook message group if you got questions. It doesn't matter. I'm here for you guys to bring forth some knowledge and information. And also learn from you guys too, because again, y'all know we peers at this. I never claim to be a guru. I'm your brother, and I go hard just like you guys go hard too, right? To make it easier for everybody and learn too. All right, guys. So I'm gonna get out of here. I think my family will be in a little while anyway too. I've already got a couple of messages here, so let me get up and get my little evening going a little bit here before they get in. All right, guys, power and profit. Salute to you all. See you guys back in the Discords and the Facebook groups.